Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Monday, July 13th. Thank you, everybody, for being here. We've had a lot happen over the past 48 hours that have an implication on the equity markets that we will be discussing. Lots of things happening geopolitically with Iran on Friday. We didn't really know where the Iran situation was going. We obviously knew that escalation was starting to escalate. And boy, did it escalate over the weekend. You've got oil prices that are once again up 74.37. We're up 4.5%. Trump just went on Fox News a couple minutes ago. And, he said some more things that are likely to continue escalating unless he's just negotiating again. But we'll take a listen to what he said and kind of what implications that could have. On top of that, not only do you have oil prices going up because of the Trump-Iran conflict continuing to get stronger, but you've got the Kospi in South Korea, which didn't really do well to start off trading yesterday, down 9%. Folks, it has officially erased all gains since April 30th. And if you remember, April 15th is when we kind of got the first resemblance of what a ceasefire could look like. And really after that April 15th timeframe is when the semi-stock started going crazy. Around the early Aprils, you had an idea that there might be a ceasefire, that this war would come to an end. Obviously, it has not come to an end yet, but at least perceptually that was the case. Around that end of April to beginning of June timeframe is really when all the gains were made across Micron, Nebius, SanDisk, all those names. Obviously, SK Hynix and Samsung SK Hynix just went public on Friday in the U.S. markets, and all those gains have been eliminated. So I think a lot of the market now is questioning the validity of SK Hynix and the memory trade in and of itself, outside of the conventional arguments that it has a low PE and that memory is needed. All that stuff is fundamental. All that stuff is strong. I don't think anyone's denying those core arguments. But the trade, right? The trade itself, how levered up is the trade? SK Hynix right there down about 9.3% of the pre-market, which is affecting Micron, SanDisk, Western Digital. Micron down about 6%. And how much more momentum do people have in order to give a premium to the trade? So we'll talk a lot about that throughout the day. On top of that, all the other semis are down. Western Digital is down. Broadcom down. Meta, which had some new announcements around data center stuff, that is also down about 0.5%. We'll talk about what they said. The S&P 500 down about 0.34%. You've got Corning, that's down 3%. SoFi, for some reasons, up in the pre-market. I actually don't know why, because with oil up, rate hike probabilities perceptually go up, which is bad for SoFi. So all the other fintechs like Hood and Affirm and Coinbase are down. Bitcoin's down. SoFi is up. So SoFi is showing some really strong resilience in the pre-market, which is nice to see, but it is a bit confusing how that one is green. HPE is down. Dell is down. AMD, even though they got a big upgrade this morning, that is down. IREN is down. CoreWeave is down. Nebius, Keel, APLD, all of your semis. SpaceX, by the way, we got to talk about this because it's starting to, dare I say, collapse, especially with more supply in the next couple weeks, getting ready to come on board soon, along with your Rocket Lab and ASTSs of the world. The space trade, the drone trade, the semis trade, kind of not really working out so far. Same with the fintech trade. Now, software has been okay over the past couple weeks, but it's not been amazing. Some of the software names like ServiceNow have rebounded. Obviously, the Palantir type of trade from the lows at 107 has rebounded, but they've not fully broken out to the levels they were at in early June. And so you're not really seeing a rotation into sectors that, we would expect to see a rotation in. You're kind of just seeing a broadening out of this market into more consumer defensives and industrials, which, I guess are an important part of the market. Obviously, they're an important part of the market, the Home Depots, the Lowe's, et cetera. And that's what's helping the S&P hold above 750. But it's not the sexy stuff that, retail is betting on right now. And so at least it's good for the broader indices, not really good for individual stocks. And so we're going to see this week how the market tends to interpret all this stuff. Hopefully everyone had a good weekend. We have a big week. We've got a lot of earnings this week. Netflix is starting off this week. I think that's going to be one of the more interesting ones, along with ASML. So you got Netflix, ASML, TSM just put out their monthly results. They have earnings on Thursday. We'll talk about their monthly results. The TLDR, TSM is growing like crazy, as they are expected to, but the stock really not being affected today. Tomorrow, you've got all the banks: Goldman Sachs, Bank of America, Citi, Wells Fargo, JP Morgan. So you've got a lot of those companies that are reporting. Then you have J&J on Wednesday. You have United Airlines, Intuitive Surgical, UNH. So you got a lot of those larger companies that aren't as volatile, like healthcare and banks, but are obviously really important to determine the health of the U.S. economy. And then we've got tech. coming up pretty soon. We'll start off with Netflix earlier today. Is SK Hynix trading under SKHY? Yes, SKHY is the new ticker for SK Hynix. You know, this one felt weak. We saw it go public on Monday, and it IPO'd at It IPO'd at 150. It opened at 170. So obviously it had a nice little 20% jump, but it really couldn't break above one. The most it got to was 176, and it kept getting rejected there. So it didn't feel like it didn't have that SpaceX type of a move. And after Kospi took a hit, you know, now you're seeing SK Hynix take a hit. So I'll be curious to see how the memory trade plays out today. I think all of us are curious to see, you know, do we really need a real flush out on memory for buyers to step in? Because for some reason, you know, Micron's down 30% from the high. Like, buyers are not stepping in yet, although it has gone substantially cheaper from the highs, which the only argument you can put up is either it's consolidating and eventually it's going to make the move up, or you don't buy traditionally cyclical stocks when you have low PEs. Either it's that argument or that it's consolidating, and time will tell. But, you know, right now the market is not treating these names as the biggest opportunity right here, which is why they've been taking a hit. All right, let's get into it. Good morning, good morning, good morning. Yes, we are rocking the NVIDIA Polo. Someone gave me this at I believe his name was Daniel, if I'm not wrong, gave me this at the Miami meetup a year ago. So it's cool. I love having the company merch stuff. So we are rocking the NVIDIA Polo with the top buttoned up button with 2 Ds. You know what I mean? And that's how we are starting off this Monday morning. All right, so one other quick thing. I'll be on a stream on Wolf's channel at 1 p.m. with Chris Camillo. So me and Chris Camillo will be on a stream. We're going to be talking about agentic trading and all that good stuff. So I'm sure we'll get into some other topics. But 1 p.m. on Wolf, either on X or on YouTube, you can find it. I'll be on a live stream with Mr. Chris Camillo, and we will keep going from there. All right, let's start off with Trump. Here's what he said about 10 minutes ago about Iran.
They have no chance. Look, we have them in the run. Most of their equipment is gone. Their anti-aircraft stuff is gone. We hit them very hard last night. Every time they send a drone, we hit them very hard. But we had a deal. What nobody knows, we had a deal. It was a done deal. And then they broke it. They always break it. We've had 10 deals with these people. And so we're just going to hit them very hard. And we're going to keep the straight. And we'll probably run it. We'll become the guardian of the strait. Maybe we'll call it the guardian angel of the strait. And we should be reimbursed for that. When we do that, we're going to be reimbursed because the other nations are very wealthy. They're on our side. And we can't be expected to do that for nothing, unlike we had for many years. You know, we guarded the strait for 50 years more, and we never got paid for it. They made all the money, and the United States was just, you know, they wouldn't. It's amazing. We guarded it for nothing. And now we're going to guard it. We're going to get paid for guarding it, a lot of money. But we just want to be reimbursed for doing all of this, for putting our people in danger. But we're really not putting people, we're really saving people.
So that was the extent of what he talked about when it came to the Strait of Hormuz. This new talking point around we've been guarding the Strait for 50 years. I don't know about you guys, but this is the first time I'm hearing him say something like this today. That's like the first time I was like, oh, I've never heard Trump kind of use that framing for this. So apparently the new argument is we've been guarding the Strait for 50 years. We haven't gotten paid for it. And as a result of guarding it, I'm assuming he's talking about U.S. military assistance around the Middle East in general. That is why we deserve to, you know, get some compensation out of this. From all perspectives that I've tried to analyze over the weekend, even the more optimistic ones. And then there were a few of those like, hey, negotiations are doing well type of headlines with the Qataris and the Pakistanis. Oil up 4% right here, obviously showing that the negotiations are not being interpreted as necessarily going well yet. Now, you know, it's a long week. It's a long day. Trump might say something in the next couple hours that flips everything. But I wonder today, more importantly, how much does the market care? Once again, it's the same back and forth between Trump and Iran, same accusations of both throwing that both are throwing at each other about, you know, what one side should be doing better than the other. But at least last week, the market ignored it. The market didn't go down last week because of the Iran situation, in my opinion. I think the market really went down because of exhaustion around the semi-trade, along with a lot of headlines around Meta and what it means to have excess compute, et cetera. Although Meta did a nice little reversal on Friday, which we'll talk about even deeper. Also, Elon and Sam got into some beef over the weekend, which we will talk about. But now I think this week's going to be interesting because this is the second week in a row of oil being above 70, which isn't that big of a deal. You know, if we get above 80, 90, that's a much bigger deal. But the fact that we were below 70 for a couple weeks in July 4th around that time and now we're trending back up. Like, trending up is not a good thing. And eventually that hurts inflation expectations, which should hurt the stock market. So if that's not happening, that means the markets once again are saying we are ignoring this, we are moving on, we are pricing in that this will be over, until they don't price it in that it's going to be over. The 10-year obviously pricing in that oil will continue to be higher as we are pushing 4.6, which is not something that anyone wants to see. I think the reason stocks are down pre-market is primarily because of this 10-year continuing to go higher as well. But if we reverse, or if we don't have that much of downside momentum, then maybe once again the market says, this will be over sooner than what we can think, which is basically what they've done for the past 2 months. So I think today's going to be an interesting day, but this week's going to be interesting with earnings coming up, given this Iran headwind continues to be a bit more aggressive now. Yeah, so Fed Chair Warsh is testifying tomorrow in front of Congress. I'm assuming that'll have some impact on the market just based on stuff that he could possibly say. I think that's around 10 a.m., so we'll watch some of that. Now, granted, Warsh is really good at making sure he speaks in a way that doesn't trigger the market thinking in a certain way. In fact, he doesn't even want to give guidance to the market. So I don't think he's going to say something necessarily that the market's going to run with and be like, yep, this is horrible, we need to tank stocks for this, or this is amazing, we need to take stocks higher. But he will be talking. So I think the market will be on edge tomorrow as well as Warsh testifies in front of Congress. This is something that every Fed chair does, once they get into office. And so we'll see if that has any implications going into the rest of this week. Okay, Elon and Sam, let's get into some of the billionaire beef over the weekend. This is why you can't leave X. This is why we are all on this platform. So before we get into that beef, it's important to understand the context. This happened Friday after the close. Apple put out a lawsuit alleging a misappropriation of trade secrets as per newly disclosed court records. The core allegations are that OpenAI and the partnership with Apple, which started back in 2023. Remember, Gemini was not supposed to be the default model. Apple was actually trying to diversify away from Google because they had spent so long using Google as the default search browser. So I think they were optimistic that they could have some more competition when it comes to search for their billions of users. OpenAI was supposed to be the leading LLM that was powering Siri. Now it's Gemini. And Tim Cook is alleging that the collaborations that OpenAI had with Apple during that time led to OpenAI poaching a bunch of their engineers and essentially stealing proprietary trade secrets because OpenAI is getting ready to release a new device. The information reported this morning as well that OpenAI's first consumer hardware AI device could launch as early as February, but the Apple fight could disrupt that timeline. The products OpenAI has reportedly explored include a displayless smart speaker, smart glasses, a digital voice recorder, and a wearable pin. Now, you guys know my thesis on AI wearables. I don't have to get into it. I am not a fan of it. I think it's kind of laughable that OpenAI is really trying to compete with Apple out of all companies in this dimension. But if you're going to compete with them, one of the best ways to compete, even if it's not one of the most ethical ways to compete, is to get some of that juicy IP. There's part of the reason that OpenAI took away Johnny Ives from Apple as well, even though he retired from Apple, and paid him $6 billion to work with them. So the question here becomes, A, is OpenAI going to be successful in building new consumer hardware devices? B, is this probably the reason that they didn't go public? Because Sam Altman knew that if they tried to go public with this pending lawsuit over one of the biggest hardware launches, that is probably the next trajectory of revenue growth for the company, because they're not really crushing it in the enterprise like Anthropic. I mean, they're doing well, but they're not doing as well as Anthropic. The consumer ad business is nascent. The consumer subscription business is not enough to really fund all their capex. So they need another avenue of growth that's probably hardware. And that's required them to play some dirty games by stealing secrets from Apple. If the stock was public, it would be down 30%. On this news. I mean, Apple is a $4 trillion company. They don't get into lawsuits to take it lightly. That not to say Apple's going to win this lawsuit, but they're definitely going to put up a fight. So I think that's a big headwind now over OpenAI, and it's obviously going to have a lot of implications for the broader AI market. But Elon had to get involved here because, Elon's not a fan of OpenAI, given their lawsuit that they had over the past few months. Elon said he takes scamming to a whole new level, he being Sam Altman. Sam Altman quote tweets it and says, homeboy, 41 years old, by the way, homeboy, you're the one selling public market investors on short-term space data centers. Which, quite frankly, is He is right. I wanted to comment underneath this and say, guys, you're both scamming us. It's okay. Like, you both can scam us. But then Elon says, we start flying them next year. Maybe you can come see them if your parole officer approves. After stealing an open source AI charity, you then stole all of Apple's phone technology. Wow. What do you plan for an encore? That's tough to beat. So this was great. I mean, this was absolutely great. This was, A-class. This is why Netflix stock is down, because the attention of many people is now on X in these billionaire Twitter beefs over watching new shows on Netflix. So, I mean, look, ultimately, what is this going to mean for OpenAI? I think it's not positive. I don't know how anyone could say it's positive. Sam Altman is trying to be very nonchalant about it. He basically said, we denied the allegations, we denied the rumors. I mean, you've got people on X, even anecdotally, actually saying, no, like, OpenAI legit is poaching people. So someone right here, who's a relatively large creator on X, here's what he said. This guy's owned Apple for like the past 15 years. He said, I know a guy who spent 10 years at Apple working on optics for the iPhone until about a year ago when he was poached by OpenAI with an offer he couldn't refuse. If we were better friends, I would ask him for the inside scoop. So it is undeniable in my mind that OpenAI obviously gave some really juicy offers with a ton of stock-based compensation to people that were working at Apple to help them build some of their hardware. The question is, are they going to be able to build meaningful hardware that's actually going to be able to scale? And, I don't know if that's officially going to happen or if that's going to, have any momentum to scale. But Homeboy is scamming us. And that is Sam Altman's perspective on what's going on with SpaceX. I mean, he's right. Like, selling public market investors on this vision of orbital data centers in the short term. I mean, SpaceX has been a disaster. So can anyone deny that? When IPO at 135, no one, unless you really had the hookup, got allocation at 135. I mean, and if you did get allocation, it was like 1 or 2 shares, right? It wasn't anything too crazy. Stock goes from 150 to 230 on this expectation that orbital data centers is why it should be worth almost as much as NVIDIA. And then it crashes right back down, leaving God knows how many bag holders. So, like, SpaceX IPO has been a disaster. You only have 4% of the supply that is fully diluted right now. There's got to be 96% more shares getting unlocked. I mean, it's really kind of scary to see what could happen with this stock. So, yeah, I mean, like, obviously the valuation is too aggressive on SpaceX, but I think you could also say OpenAI has had a myriad of different proposals and scenarios that have not necessarily worked out. And by the way, OpenAI has already failed at a couple things. Remember Sora, the app that was supposed to compete with TikTok? Like, they had to shut that down because it wasn't working. So who's to say their hardware endeavors, if they try it out or if they can't try it out because they're stuck in legal lawsuits based on the IP battles, aren't going to allow them to, be successful, and then they're just going to have to cancel it. And imagine they go public on the vision that they're going to create an iPhone competitor, and then it doesn't work. I mean, what happens to that stock? Just like SpaceX, if they don't get an orbital data center out by next year, Elon said it's going to be out by next year. What if it's not? Or what if it's really not that compelling in terms of a meaningful source of revenue generation, right? Like, what happens to those stocks? They go down, right? Because the narrative changes. And I think that's what's happening right now to SpaceX and OpenAI. Having said that, OpenAI came out with a brand new model, GPT 5.6 last week, which was also very compelling. Meta came out with MetaMuse Spark 1.1 for their agentic coding. That was very compelling. And then this happened over the weekend, which once again is proving that Alex Karp was indeed right and that the models are just, I mean, what can you say? It feels like they are the biggest commodity business in AI right now. What did Claude have to do because of GPT Soul and because of Meta reducing the cost by 90%? We're extending Claude Fable 5 access on all paid plans, as well as keeping Claude Code's weekly rate limits 50% higher through July 19th. Claude had to increase the Fable 5 access and rate limits on Claude Code because if you wanted to leave, you could. If you're in a certain location and Exxon is giving you a penny cheaper on gas than Chevron, guess what? You're going to go to Exxon because at the end of the day, you just need the gas. That's why oil is a commodity. When it comes to Claude right here, it's seeming kind of obvious that the reason they're finally increasing the rate limits and extending their paid access is because they know that if they take it away from you or if they charge you too much for the tokens, you're going to go to Meta. You're going to go to GPT. You're going to go to open source models. And I think this broader debate around what's happening about open source is starting to become a lot more legit. As Parzival says, I canceled my Claude membership to protest not getting access to Fable 5 with my membership. I think you are not alone. And I think, think about an enterprise that starts to get pissed off that they're getting rate limited based on the amount that they're paying as well. You had NVDA come out yesterday and literally quote Alex Karp in a brand new article. The article was called The Reverse Information Paradox. And he said, as Alex Karp put it, what the technical customers want is control over their compute, their models, their data stack, and their alpha. They want to know the means, that they own the means of production, and it is not being transferred to someone else. The current regime does precisely the transfer Karp and companies fear. I mean, this was crazy. This was absolutely crazy. That Satya Nadella, $4 trillion, or at this point, given Microsoft's in a bear market, $3 trillion CEO is coming out, 2.86 trillion, sorry, it's not even 3 trillion yet, comes out and says, hey, Karp was right. Karp was right. That's why enterprises need a real trust boundary for their human capital and token capital to compound it. But it wasn't just Nadella. Benioff gets into the game and says the currency of AI is trust. He tweeted this morning. Since launching Agentforce Trust Layer with zero data retention in 2023, we've drawn a hard line with our model suppliers. Your data is your data. It is not our product or their product. We have never used customer data to train AI models. So you've got every big CEO that has a stock that's struggling, like a Microsoft or like a Benioff, also like, an Alex Karp with Palantir. All their stocks have not done that well this year. Alex Karp, I think, just, made the case passionately and has been making the case passionately for 2 years. And now everyone is starting to hop on the bandwagon that the models are stealing your IP and all they are selling you is compute or tokens. They don't actually care about your business. They don't actually care about creating transformational value. They don't actually care about having boundaries between your intellectual property and what you're going to do for the trajectory of how that IP can take your business to the next level. They just want to sell tokens. And that's why Meta getting in the game is allowing Meta stock to kind of get a re-rate here because, Meta is saying, hey, if it's just a game of tokens, we can sell you tokens at a way cheaper price. You can choose our models instead of the models right there, especially if our models are just as good, which is why, Meta is finally getting a rebound because their CapEx is going to something that the street thinks has more, at least, diversified revenue potential. So when you've got Benioff coming out and saying, hey, we protect your data, and you've got Nadella coming out that has a $300 billion stake in OpenAI and basically throwing shade throughout the entire article to the model companies by saying they don't actually have your interests aligned with what your business wants to do, which is why Microsoft's now trying to get into the whole forward deployed engineering model. I mean, I think it's only proving that Palantir is right. And Palantir has been right. Now, that hasn't necessarily helped Palantir stock yet. Obviously, I think the market is recognizing that Palantir has been right about this, and the growth that Palantir shows over the coming weeks and quite frankly, quarters is going to be what starts to become undeniable at some point, if they actually do end up 3xing free cash flow and growing at 100%. But this is the reason why the stock's not at $100 anymore, right? It was very close to going below 100. And I think when Karp did that CNBC interview, he got the entire world to think differently about what is actually valuable in the world of AI. And you've got a lot more CEOs that are hopping on that bandwagon of explaining that the models aren't really what's valuable because they can be replaced tomorrow by a new model that comes out and undercuts your price. I mean, that is the definition of a commodity. That doesn't mean Anthropic and OpenAI are going out of business. That doesn't mean they're not super important, but it just means they might not be where all the value comes in AI, which means the market has completely got the software apocalypse wrong. If the actual application layers, the ServiceNows, the Palantirs, et cetera, are going to be what process, govern, and orchestrate the tokens in order to provide value. Now, Anthropic and OpenAI might try to go after that layer, and maybe they're going to be successful at that. But if they only care about selling tokens, it's going to be hard to necessarily care about providing value. And I think that's the difference that we've seen over the past few weeks with the mind share now when it comes to the broader open source revolution. So that is what we got on Apple, OpenAI, and these software companies going back and forth at each other. Speaking of Apple as well, looks like you've got new M6s that are ready to launch when it comes to their laptops. Apple is expected to launch a base M6 this fall, but skip the M6 Pro, M6 Max, and M6 Ultra, moving directly to M7. The reason is because Apple reportedly planned major neural engine upgrades for M7 and decided the AI improvements were important enough to accelerate the next generation. The reason Apple stock has done the best this year is because not only have they had increased levels of demand, they've had the highest growth rate they've had in 5 years, they're also not spending a crap ton on CapEx. And so now that you've got new models, I was actually thinking of getting an M5 laptop, a brand new one, but now if the M6 is coming out, then I'm probably going to wait to get that. And I want to see, how fast can they make it, and quite frankly, what new AI initiatives can they do to make this a lot better? The M7 Ultra will be designed to support up to 1.5 terabytes of memory, which which will obviously cost a lot of memory given the memory costs are going up. But Apple's already developing M8 chips, and they signed that big deal with Broadcom last week as well, which caused Broadcom to get a little spike, $30 billion in deal value. So this is going to be interesting going into this week because that leads us to the conversation around the semis. Put in the chat right now, let's do the green or red poll as well for today, but put in the chat why you think the semis have been taking a hit. Because as we talk about that Apple announcement, it's super exciting that you're going to get new laptops and that's good for Apple's demand, but the cost of those laptops is going to be higher because the cost of CapEx, particularly for memory, has also gone higher, green or red today. And, I wonder what that means for the broader semi trade, given they are starting to inflate prices, and that inflation is affecting the entire economy. We don't know if it's enough to increase CPI. By the way, I think CPI is tomorrow, if I'm not wrong, or it's Wednesday, but we will have a fresh report on CPI, and I don't think it's going to be pretty, given the memory inflation we've had. Yeah, it's tomorrow. And, the market's going to have to sniff out how much they actually care about inflation, or if they think this is just a short-term boost of prices for these hardware products. A lot of people saying because these are cyclical, because these stocks need a breather, hedge funds are manipulating. The thing about hedge funds is we looked at a couple stats last week that Sandus right here down about 5.8%. The hedge funds and the institutional investors have been buying the most amount of stock in the tech space in about 10 weeks. So there's been a ton of selling of stocks, but there's also been a ton of buying of XLK as well. So I think you've got, but now I think the division here is that it's hyperscalers that are being bought up, your Metas, your Googles, your Amazons, not necessarily semis, although they're all kind of part of the same tech ecosystem. Because obviously the semi dip, it's just not getting rewarded. Being able to buy, this is the fact that last week you could have bought the semi dip on Monday, and realistically you're up a little bit or you're breaking even on most of those buys a week later on Monday. It's the first time we've had a week-long run of buying the dip in semis and not being rewarded for it, which sounds super crazy because it's like, yeah, you shouldn't expect to buy the dip and in a week get rewarded for it. But realistically, this whole year, if you bought the dip within a couple hours, you'd be rewarded for it. And so either this is one of those things where it's a waiting game and the semis are going to have a massive rebound because these charts haven't completely broken down, although some of them are down. Bloom Energy went from 320 to 232. Nebius obviously went from 298 down to 185, back up to 212. So, they've not completely been destroyed. It's not like they're down 50 to 60%, but they are down 20 to 30%. And the financials are up. The Ubers of the world are up. The stocks that were relatively boring throughout the year. The question is, do those stocks continue to get rotation? T1 Energy, I know this has been a hot name. This one's down 30% from the highs. Or do these names kind of stay in this broader consolidation range? ChatGPT is available again on WhatsApp in the EEA, part of our work to make AI accessible in the apps people use every day. All right, so OpenAI disclosing that they've now allowed ChatGPT to be reinserted in certain regions. We got an update from Iran. Iran's top joint military command says any attempt by the U.S. to transit through the Strait of Hormuz without Iran's authorization will be strongly confronted. Intel, by the way, down about 3%. Iran will not allow the U.S. to intervene in the management of the Strait of Hormuz. If the war widens, it will reach all the countries of the region. Responsibility lies with the U.S. and its allies. To leaders of any regional countries, any cooperation with the U.S. will be considered war against Iran. I forgot to mention, Iran did launch attacks over the weekend on Kuwait and Bahrain. So this idea that, and Jordan, this idea that Iran is saying, which is that they're going to take down, Middle Eastern allies with them, which is why this has been such a complicated situation, because it's not just Iran versus the U.S. It's Iran that has access to attacking all these Middle Eastern allies that the U.S. is supposed to be, protecting. Now the U.S. has to navigate that in relationship to actually dealing with Iran itself. So yeah, again, I don't know how much the market is going to care about this. I think oil's got to get at least above 80 for us to feel that the market's taking it seriously. But as of now, the market is not taking it seriously. And, until then, I guess we're going to be stuck in this back and forth with oil prices being here and Iran and the U.S. continue to fight. I can tell that people are annoyed of it, obviously. I'm annoyed of it as well. It's annoying to cover this. I've got this kind of theory that Trump's going to let this linger until the midterms at this point. And I talked about this last week. I kind of think he doesn't even care about the midterms anymore. Like even last week when he said he's not going to be signing the housing acts to increase more supply, which is obviously desperately needed right now because mortgage rates continue to be north of 6% until the SAVE Act is passed. I think that's Trump saying, hey, like, I got 2 years left. I'm just going to do whatever I want. And if we don't pass any policies until I get the policies that I want are passed, then so be it. And maybe he has the same feeling with Iran. Like, we're either going to completely invade and take over the Strait of Hormuz and finally have control over it, or we're not going to do anything. And to hell with the midterms. This is, what my second term is going to be based on. And if that's the case, then this is going to last for a much longer time than expected. Granted, I don't think he really wants that. I think he might be thinking he has no choice, but I also think he really wants a stock market that goes up and oil that comes down. It's just how much excitement does he have to actually get back to purely focusing on the economy versus the geopolitical stuff. NVIDIA right there, that is down 1.45% as well, as we're seeing in the pre-market. I was listening to a couple of podcasts over the weekend, and I think, I heard one argument for why NVIDIA's multiple is lower, and I want to play this right here. I think there's a reasonable argument to explain why NVIDIA's multiple is lower. All of us have been saying the market's stupid, the market doesn't get NVIDIA, or it's just too big of a company, so the forward PE can't get that high. But maybe there's a different thing, which is not that revolutionary of an argument, but maybe there's a different argument for why NVIDIA is actually trading at the level that it's trading at. So let's take a listen to this right here, because I think it does give somewhat of an explanation about why NVIDIA is stuck in this $200 range.
Important point. According to JP Morgan Equity Research, the unit economics of ASICs, so we're talking about Google TPUs, AWS Trainium, Microsoft Maya, Meta, MTIA, they're improving versus NVIDIA. You wrote that the hyperscalers using their own in-house chips report total cost of ownership reductions of 30 to 40%.
Right.
Okay. Is this why you think NVIDIA is stuck in the mud? Because the forward P of NVIDIA is as low as it's been. I think it's at 18 times forward.
It's 20 right now.
I don't think that's bullish. That's not a good thing. I don't think NVIDIA getting cheaper is like awesome.
Right. So first of all, like the thing you just read is a great advertisement for the other thing of me saying this is more complicated than other technology revolutions. Because for the last few years, we were all told that NVIDIA GPUs were untouchable, and that the efforts that the other hyperscalers were making to develop their own alternatives were not ready for prime time, and that they were stuck contributing forever to NVIDIA's 70% gross margin. That was wrong. And all those companies that you just mentioned have been able to build their own accelerators, right? These are all fall under the category of accelerators that migrate compute away from the CPU. And none of them have successfully yet figured out how to, or even if they want to, sell them broadly to third parties, because you'd need a sales force and you'd need customer support. And NVIDIA has all that. You need all the software, but they were huge customers of NVIDIA. So even if all they do is build their own tools to replace the NVIDIA stuff they used to buy, that's big news. So yes, NVIDIA has $1 trillion backlog, but that's not the point.
I listened to Andy Jassy on a call, maybe last quarter or the quarter before, explain that if Amazon's Trainium business internal would be valued the way that we value other semiconductors business, like the annual revenue that would be equivalent to, it would be one of the largest companies in the world.
Yes, but again, right now it's mostly internal to Amazon.
But couldn't that change on a dime?
It could, but again,
the cloud was internal to Amazon until one day it wasn't.
But it doesn't even need to be a problem for NVIDIA, which is I think what you're mentioning, which is like these are some of NVIDIA's biggest customers saying, you know what, we're going to buy some GPUs, but less than we used to because we're building our own and saving a lot of money.
And the market is sussing that out.
So it's a very simple argument that I don't think is going to be new to anyone here. But what if the reason NVIDIA's multiple continues to be below 20 times is simply because the market's saying, okay, NVIDIA's 4 largest customers are all building their own chips, which means it doesn't mean they're going to stop buying Vera Rubin's or Grace Blackwell's or the new chips that are coming after Vera Rubin Feynman's, but they're not going to be buying as much. And if they're not going to be buying as much, which is still going to be buying a lot, right? Jensen said we have $1 trillion in backlog, and obviously that's going to lead to a lot of momentum in terms of the overall level of growth for the company. But at a $5 trillion market cap, you have $1 trillion in backlog. That's why I remember I was there at GTC when Jensen said we have visibility to $1 trillion in backlog, and the stock went up $3 for like a millisecond and came right back down and then was red for the day, because the market's like, we don't care about $1 trillion in backlog. You have $5 trillion of market cap. Like, you need to be putting up multi-trillion levels of revenue backlog for us to be excited. And I think from that perspective, you've now got Jensen trying to venture into all these other different avenues of business. The robotic stuff we haven't heard too much about yet, but theoretically the robotic stuff could be undercut by other companies that are building chips for robots, aka Amazon, which is already building their own robots. So you've got that headwind. But number two, Jensen getting into this neo cloud backstopping business that kind of gives a Nebius a bunch of money. Nebius then uses that money to rent out compute, and then they give a share of that to NVIDIA. That is a way for Jensen to kind of make the argument that once we sell a GPU, it's not a one-time sale, it's a reoccurring kind of quote unquote subscription business on that compute going back to NVIDIA. I think they're trying to be really creative with communicating to the market, as Apple's up 1% right here, 0.5% of the pre-market, that there's other ways for them to grow outside of just selling chips, because the market's starting to wonder, does Amazon with Trainium, Google with TPUs, do they really need to buy as many chips as they were buying in the past? We thought NVIDIA chips were untouchable, and maybe they are starting to become less of the crazy boat. Now, having said that, NVIDIA still should be a $250 stock in my opinion, just based on the multiple that is trading at versus the growth that they're expected to put up. But if the market's trying to sniff out what that growth is going to look like in a year and a half from now, maybe that's starting to create some of the hesitation. That's the best excuse I have for why NVIDIA has been stuck all year. And maybe that's also happening with Micron. We talked about that argument last week about Bloomberg saying that memory oversupply will happen by or not massive oversupply, but the hints of supply coming back to realistic numbers by the first quarter of 2028. We're a couple months away from 2027. The market's gonna have to price that in sooner than later. And SK Hynix, the chairman of the company, came out and said that on Friday, he thinks that demand is only going up and up and up. And even though they're doubling capacity, their customers want them to 5x capacity. So obviously there's a supply-demand imbalance. But if the market has already figured that out, and if there's any hint of that supply-demand imbalance changing for one of the big three, because then it changes for all of them, that's when you take the multiple down a little bit. This should be hitting AMD as well. That is a fair point. The difference is AMD is still under $1 trillion in market cap. So I think, and it was well below under $900 billion in market cap 3 months ago, which is why AMD has more than doubled from the lows. And obviously CPUs have started to hit the S-curve as well. But AMD has also been kind of stuck for the past month, right? AMD gets up to 550, goes back down to 530, then gets up to 580, then goes down to 495. Like, it's also been kind of stuck the way NVIDIA has been stuck. It's just year to date, AMD has done way better than NVIDIA. And so these earnings are going to be super important for all of these semi companies, because they need to show that their backlog and their RPO is going to be pristine. And the CapEx coming from the hyperscalers needs to once again go up to prove that they have enough money to buy more product from Marvell and NVIDIA and AMD and Corning and all that stuff. And that's the news that we got this morning from Meta. So Meta is now expanding the Louisiana data center that they were initially committing $50 billion to $250 billion. They're also planning $1 billion in local infrastructure improvements, and says the site will support 1,000 roles when operational. It's going to be 5 gigawatts of capacity, and that in total investment is going to go from $10 billion to $50 billion. So the total site cost going from $50 billion to $250 billion is expansive. It's also in line with Jensen's thesis, right? That a gigawatt of compute is going to get to about $100 billion right now. I think it's at around $30 to $40 billion to ultimately build. I think the market's struggling with, hey, is that sustainable? B, do we have the supply to actually make that happen? And then C, are the hyperscalers definitely going to say over the next 2 years that they are going to be spending at the level that we want them to spend at? Which, again, nothing insinuates that they're not going to be doing that. But, the market once again continues to question it, as the market should be questioning it, because that's what keeps the market more healthier than not. Another stat that I thought was really interesting: NVIDIA, Micron, Broadcom, and Applied Materials are expected to generate $430 billion in combined free cash flow over the next 12 months. That would be triple the free cash flow they generated 2 years ago. At the same time, Amazon, Google, Meta, Microsoft, and Oracle is projected to turn negative free cash flow for the first time in history, which would be a massive reversal from the $260 billion peak reported by these companies back in 2024. You would think this is super bullish and the semi should be being bought up on this news, but that sort of conventional, timeless truth is entering into the picture, which is that when things get this extreme, you don't buy the companies that are benefiting from it. You buy the companies that are not benefiting from it because it's likely a top for the companies benefiting and a bottom for the companies that are not benefiting. Having said that, I don't know if you can necessarily say it's a top for the semis. I think it's going to continue to be volatile. Kospi being down 8% or 9% yesterday doesn't help. But if the broader AI CapEx story continues to play out the way that it plays out, maybe it's not going to be that easy to buy a semiconductor stock and be up 10% in a week, but the earnings growth can't be denied. And so I think those names still do well. It's just those names have done really well. A Corning is up 120% this year. You know, SanDisk, that's the one thing I don't have sympathy for when people saying that, you know, the semis are dead. It's like, well, hold on. They're up a lot. And so because they're up a lot, maybe Netflix gets some love. Maybe Uber gets some love. Maybe Meta, maybe these companies, maybe a Microsoft that is spending all the money to help Corning and Marvell and Micron. Maybe that stock shouldn't be in a bear market year to date down 19%. Now that rotation, although it would be logical, I think would really mess with retail because retail is so levered up in these semi names. And that's why, you know, I think there's been an imbalance in terms of how the market is thinking of this. So that's what we got. That is what we got. Why is SoFi dumping? Well, I didn't know why SoFi was pumping in the pre-market, so it kind of makes sense that SoFi is going down right here. SoFi was above 19 pre-market. There was no news. SoFi right there now, potentially just below 19. We got 2 minutes until the market opens. It's going to be a very interesting week with everything we got going on. For those that are just joining, we got CPI tomorrow. We got Trump this morning who said that they plan to take over the Strait of Hormuz. I know he said that a million times, but this time, I don't know if he's serious or not, but he continues to say it. Nebius right there down 3%. SK Hynix down 9%. Put in the chat and let me know if you're buying SK Hynix as well or DRAM. Obviously, all the memory names, wow, DRAM down 9%, are presenting an opportunity right here potentially. And you know, SpaceX, I think I'm really interested to see what happens with it today. The stock has just been a disaster the past couple of weeks. I wonder if it actually goes below 135, which would officially put everyone in the red. Or if this thing can hold on. Meta, it's down 1% right here. Can we see if Meta gets its rebound back up to 700 as we have earnings coming up over the past couple of weeks? Robinhood chain has been killing it over the weekend. They did 3.1 billion in decentralized exchange volumes, which is the highest volume they've ever done as a new chain. So I know the stock is down right here, but their crypto offerings have been becoming very compelling to a lot more people. So we got a lot of narratives going on this week. The neo clouds, do they get a rebound? The memory stocks, do they still take a hit? The S&P 500 barely really down from the highs. I mean, it's been holding up. It's just these individual names have taken the biggest hit as the market is trying to figure out how to deal with all the semis. A lot of people saying they're shorting SK Hynix. Okay, we're going to see what happens if today is a short or long day. Here we go. Monday, July 13th, 9:30 a.m. The stock market is now open. All right, wake your asses up. Let's get into it. S&P opens down 0.3%. So we've got some red candles across the board. Tesla's down 2%. Broadcom's down 1.3%. The Qs are down about 1.2%. Let's check on our semis. Corning gets hit, down 4%. HPE, down 1%. Marvell is now officially at the price that Jensen said they would become a $1 trillion company. They were at $235 last week, so they were $10 above that price. $225 was the price when he officially said they should be a $1 trillion company. So it has completely reversed those entire moves back up from $330. Delta, that's up a little bit. Bank of America, that's up a little bit. Applied Digital, that's down 2%. Qualcomm, that's down 1.3. Tesla down 1.4. T1 Energy down another 1.3. Netflix getting a nice little boost. This thing got sold off pretty aggressively last week based on a Wall Street Journal headline about lack of subscriber engagement. 7510, that is up. Reddit, are we green? Reddit is green. Maybe the software names make a comeback. Palantir, that goes green. Robinhood, that goes green. Okay, let's see if our fintechs and software names can get some momentum here. SoFi, that goes green as well, which is very nice. PayPal, we haven't talked about that in a while. PayPal also green. All right, so all the fintechs. It was SoFi in the pre-market. Now it's everybody cooperating. Micron down 6%. SK Hynix down 7%. So it's up from the pre-markets. but still obviously down a lot on the day. Microsoft getting a 1% move. NVDA trying to flip green. Rocket Lab below 80. Rocket Lab has lost 80 for the first time last Friday since the SpaceX IPO, and now it's kind of at least teetering and tottering below that $80 range. Google, that's down 0.5%. Apple, wow, is that an all-time high on? That is an all-time high on Apple, folks. My goodness. Apple really gets the all-time high. Amazon, 247, that's up 1% as well. So Amazon and Apple making the move right here. Qualcomm's now down 2%. Grab gets above $4 for the first time, I think, in 2 months here. This actually makes sense because C Limited also, which is one of the players in Southeast Asia, also got a nice boost today. So let's see if we can get the close above 4. I know it's been a grueling journey with this stock. It's not been fun. That's also part of, being an investor. Sometimes you get on a journey and it takes a few years to see how that journey plays out. But let's see if that can actually make a move. That's up 2.21% right there. Shopify, 124.50. They got an upgrade to 160 today. Shopify's been getting a lot of upgrades. That's up 1.5%. Ondas is about to go below 7, potentially. It actually did go below 7, 697. Again, this drone theme has just been hit. Although Kratos is up, so that's weird that Ondas is down. Aero Environment is also down. Ondas is actually down more than all the drone names. It's down about 4%. The others are down only 0.5%. So that is maybe more specific to Ondas. Zeta, 2167, that's up. ASML, that's down. Amcor, that's down 4%. Penguin Solutions, this thing was at $90 last week. 74.60. This one is also taking a hit after a really good earnings. BlackBerry, that's down about 2.9%. IWM, that's down 0.5%. CleanSpark, that's down 2%. Zillow is down. I think the street loves this Apple lawsuit as a form of A, making sure OpenAI can't compete with them, but B, Apple just flexing their muscles for how big of a company they are. Where if OpenAI was public, I think that stock would be taking a hit, but they're not. So Apple is going higher. Robinhood trying. Let's see. This thing was at 119 on Friday in the pre-market before it got obliterated. So I think it could get back at least into that 114, 115 range today. But we got to see. Wow, SpaceX, lowest since IPO. Lowest since IBO. Accelera also down 4%. I don't know why this is down, but I think they have earnings coming up. That one taking a hit. SoFi just below 19. Micron as well. Lows of the day, 919. That one is falling off a cliff right here. It was 932 pre-market, so already down below 920 right here. Nabesis is actually holding stable. I know it's down 3%, but it was pushing 208 last week. So the fact that it's at 214, 215 is not that crazy. IREN, 4168. IREN actually the best NeoCloud today. I think CoreWeave is also down about 2%. Yeah, IREN is one of the only green NeoClouds right here as SpaceX continues to get hit. ASTS, wow, continues to get hit. Down 3%. Is AMD up? AMD is down 4. NVIDIA is only down half, which is very similar to what happened on Friday. NVIDIA did get a bump on Friday, but then it fell towards the end of the day. Granted, we were looking at NVIDIA at 194 last Monday. So the fact that it's at 210, at least we've got, a nice little move since then. Apple, there you go, 320. 320 for Mr. Apple. C Limited, that's going up 2.9%. This stock got really crushed in March over the oil concerns, even though the earnings just continue to go higher. And so obviously you've seen the company get fully re-rated. Now, obviously their free float is also less than 1 billion shares, which has been really good. I think the exact same thing is happening to Grab. You had the oil crisis that hurt them really badly. And then you had general emerging markets headwinds. A lot of that stuff is starting to clear up, and the operating leverage of the business continues to go higher. So I don't think it would be crazy to see a move like C Limited. It's just Grab has 4 billion shares outstanding, which means it's going to be a little tougher. But I still believe 850 is around that fair value. It's got to do a lot of work to get there. Earnings is going to be on August 4th for Grab, so we will take a look at what happens on those earnings. Apple 321 all-time highs. Amazon 247. Palantir trying to get back to 128. Where is Oracle? This thing was stuck at 140 last week. 138. Wow. It got up to 148 at one point last week. So any Oracle buy from last week is now underwater, as you can get this below 140, which is kind of incredible. Software getting catfished again. That is hilarious. I've never heard heard a term like that. Software is indeed getting catfished today. I agree. That is exactly what's happening. Micron loses 920 badly now. Now you're fighting for 915. Service now at least holding up at 110. Palantir's also holding up. They're not really exploding yet, but they're up. VG is obviously up because oil is down, or sorry, oil's up. That's why VG is up. SMCI, that's down 1.2. Ondas barely above 7. Ouster, this was a big retail-heavy robotics name. Got pumped up all the way to 60, then they did an offering. So if you liked LiDAR robotics infrastructure, you can get it 40% cheaper than where it was 2 weeks ago as they did that offering. 4103. That stock is down 5.3%. I actually really like that Apple's pumping. It's the market basically saying we are rewarding the companies with cash flows that can buy back their stock, et cetera. Not necessarily good for the semis trade in the short term, but it's part of that diversification and broadening out of the broader market. I mean, that's why Broadcom, which just signed a $30 billion deal with Apple, is down 10% from where it was, or 7% from where it was on Friday, and Apple's up. So it's kind of the market just saying we need to be a bit more rational about the costs. Having said that, that's obviously a lot of pain for the semis when you think about cost rationalization. CoreWeave flips ugly red now, 85.36. NVIDIA just flipped red as well, 208. Meta, are we flipping green? Meta trying to flip green. Meta is on the opposite spectrum of Apple. They're not cost rationalizing when it comes to CapEx, but they're proving to the market that they have a use case for their CapEx. And that's why I think the market is more friendly to them. Same thing with Amazon. You know, even though these companies aren't producing free cash flow this year, they're still showing the trajectory of cash flow. And essentially, if the market takes Apple up, I think the other Max 7s have to be in play to go a bit higher. It would be quite incredible to see Apple go to like 330, 340, and for Microsoft and Google and Meta to still be stuck. I mean, maybe that happens to Apple, but I would imagine the other ones get a rebound. Microsoft is up and Meta officially just flipped green. Tesla is red. Now, again, Tesla's a little different from the other Max 7 because their earnings aren't really going higher. Neither are their revenues. And they're not really buying back stock. But, you know, FSD is cool. I used FSD again yesterday for like 2 hours, and it was just amazing. I was just literally just sitting back and letting the car drive myself. It's just, they kind of need to get a lot more people to pay for it, for the stock to go higher. NVIDIA right now, 209. AMD getting hit hard, 532 right here. I wonder when the dip buyers really step in, right? Like AMD, that's not even a dip. It was at 490 last week, right? So I feel like real dip buyers are going to need to see 450 on AMD. Not saying that people won't buy the dip before that, but same thing for Nebius. I think you're going to need to see 180 and below for people to really get excited. SpaceX, I don't know what price, but definitely below that IPO listing of 135. Micron, I'm curious on. The last time Micron hit below 900, it was in the pre-market, and it got bottomed up really quick. So I wonder how low does Micron have to go? 908 now, $8 away from 900, down 7.2% before dip buyers say, you know what, we have to buy it. It's been a good short all morning. Rocket Lab, that's down 3.7%. Western Digital, SanDisk, all of those getting hit as well as the software names. So Apple and the software names, along with the other hyperscalers like Microsoft and Meta, they are going green as the market, at least today, is saying we don't want to bet on CapEx right now. We want to bet on free cash flows, sustainable business models, growth that we know is always going to be there. So you're seeing a complete, change in terms of how, at least today, the market is thinking of this. Wow, Meta 675. We got to 677 last week. That was the most that we got to. I wonder if we can break above 677. Marvell pumped for no reason after the Jensen headline. Yeah, I mean, I agree. I think Marvell's a phenomenal company, but even the CEO, remember on that keynote, he was like, "Wow, really? $1 trillion?" Like, he couldn't believe it. It was like, "Okay, cool. If you think we're going to be $1 trillion, that's fine, Jensen." But Marvell just does not have the revenue or earnings yet to justify $1 trillion market cap, much less a almost $350 billion or $300 billion, which is what they were getting, or even $275 billion, what they were getting last week. Marvell now 219. And that's rational. It's rational for this thing to come back from 330 to 219. It's just, are there a lot of people that got stuck in it during that time? Or was this more algos trading it back and forth? That is going to be the question. And if there were and people are selling, that's just going to cascade a lot more of the pain right here. SK Hynix really feeling some pain. Let me know if anyone's buying this dip. 9% right here. As that continues to go. Rocket Lab also getting hit. Rocket Lab 77.28. I wonder where the street is taking this to, or if we're going down to the 76s. Meta right there, 673. Reddit 200. SoFi just flipped red. 1873. The 10-year did tick up today, which is not the best. Adobe, wow, look at that. Adobe, nice little green candle. All right, so software rotation at least seems to be somewhat intact. The SaaS names are all green except CrowdStrike, Cloudflare, which actually had a really good week last week, Oracle, that's more data center, and then Datadog. Everything else green, not crazy green, but green. The semi is just getting destroyed today. ARM down 8, Lam down 6, Dell down 2, Micron down 7, Intel down 5, SMCI down 2, AMD down 5, Qualcomm down 3, Broadcom down 3, NVIDIA down 1. Okay, we're getting some weakness in the semis. Robinhood also, unfortunately, we're seeing some pain right here. 110.84. Let's see if we can hold the 110s. If not, we're probably going to take a little bit of a hit on Mr. Hoodie. HIMS right there at 33.97. That is down 1.19%. What about the quantum names? Are they doing okay today? Quantum, wow. Oh, they've been decimated. IONQ, that's okay. So every theme besides hyperscalers and software, D-Wave down 5.2%. All of them taking a beating today. I don't think this is because of Iran either. Because if it was because of Iran, the software names would be down. Like if it was really because of oil prices, the market wouldn't be rotating into software. This is more so the market's fed up with the semis right now. And I don't think they're fed up with the semis because, like, you know, the AI story is not real. I think once again, going back to like a Marvell, I think they were just like, hey, this thing shouldn't be worth $250 billion this quickly. Now, the Micron, it's hard to, the memory names, it's hard to make that argument because their PEs are so low. But, you know, Micron did go from 400 to 1200 in like 2 months. Here's what I've also noticed on X about the memory names. And let me know if anyone else has noticed this as well. The loudest people about the memory names on X have an average between 750 and 900. Like when I go to these profiles and see like who are the biggest enthusiasts of Micron, these are not people that bought it at 300. These are not people that bought it at 400. These are not people that bought it at 200. It's people that bought it after the initial run. So 750 to 850, 750, 900. And then it went up even further. So they got even more vocal of like, holy crap, I was right. I bought this thing that was up 4X and now it's up another 2X. And, you know, now they're not as vocal. Now they're not as vocal. It's just what I've clicked on a lot of these Micron profiles over the weekend. And I'm like, holy crap, I'm seeing your first initial buys and you're buying it into strength, which is fine because Micron's still cheap at 700. But it's not like you've been in this story. And the conclusion I'm trying to make from this is that I think a lot of retail jumped in on this thing after it became obvious that Micron and SanDisk and all these companies were super important in the AI space, which once again goes back to the question of, hey, if it's this obvious, you know, maybe the trade is at least weakening a little bit. The trade's not over. I don't think the trade deserves to be over. I think if AI compute is going up, the trade has to continue. But it's not going to be this excessive, like so much alpha, no one knows about memory. This thing has to pump, 30, 40% in a week once they have some big update like that. And that feeling of how the trade has evolved is kind of gone. And there are a bunch of people that, that bought it. I mean, Neil, Couch Investor, a bunch of you guys in the chat bought this thing when it was much lower. Yeah, Mamba. I know Mamba in the chat. He bought these memory stocks when they were a lot cheaper. And I never see his tweets going crazy, bragging about his Micron position or a SanDisk position, because the people that actually bought this thing when it was hard to buy it are not the ones that are bragging. But the people that bought it 200, and if you bought it at 700 and it's at 900, it's like, dude, that's not that big of a gain. It's like, now when it got to 1200, it's like, sure, but how many of those people actually sold? Very few. And so now it's just like, okay, now you've got like decent returns, but there's a lot of stocks that have gone up 20, 30%. You don't have to take the risk of getting into a lot of the memory names to be able to do that. Microsoft right there trying to get 390, It's still stuck at 388. So the question is just going to be, how much is the market ready to once again give the premium back to these names? CoreWeave 85.57, ASTS 69.47, and you got NVIDIA right there at 208. Daniel says, I'm in Micron from the 200s, Tesla Granny from the 300s. Yeah, and I mean, if you're in 200 to 300, I don't think you need to sell right here because you have such a high margin of safety, and the likelihood of this thing heading back to 1,000, I think, is very strong. It's maybe not going to happen today or tomorrow, but I think it is very possible. But, you know, if you bought at 850, like, it's a different question. Like, your ability to manage risk at that point is just more rooted in you know, where's your downside. Poet right there, that's down 3.5%. Lumentum, your photonics plays, also getting hit, as those are down 3%. Representative John James just bought SpaceX, or I should say he bought it 45 days ago. John James is a U.S. representative for Michigan, Republican Party, Michigan. He just filed that he bought SpaceX. And so I think that's one of the first politicians buying SpaceX. I think maybe there was one more last week, but there's not that many. So you have one of your first politicians. Iran's Revolutionary Guard spokesperson, we continue to assert our authority and control over the Strait of Hormuz. By interfering in the Strait of Hormuz, the U.S. seriously jeopardized the security of global oil and gas supplies. Okay, so Iran continuing to make their point. Financial Times, Dubai plans a new East Coast port to bypass the Strait of Hormuz. The project would reduce Dubai's reliance on Jebel Ali, its flagship hub. The new site would help bypass the Strait of Hormuz. They are reportedly in talks for a new multi-purpose port. They are said to be planning a new port and container terminal on the UAE's East Coast. It is also discussing a new terminal at the existing harbor. Wow. All right, so you've got some pretty big oil exporters saying we need to officially figure out a new geographic way to get this oil to our customers, as the Strait of Hormuz is not tenable anymore. Let's keep going. Bank of America raised their AMD price target to $620 from $550. Okay, so you've got AMD, even with that upgrade today, down about 4%. Taking a bit of a hit. The Googs, are we down? Google is flat. Oracle getting punished for not only their CapEx, but for their levered up balance sheet. 137 here is just incredible. But if Oracle's going down, I don't know if Nebius, CoreWeave, and Iran are staying up either. I mean, Oracle's got the most RPO out of all of them. They've got 350 billion. No, sorry, 5.6. It's like 583. It was 553 last quarter. 583 billion. Most of that is OpenAI, but still. Maybe that's also why Oracle's going down, because if OpenAI is getting sued by Apple, that's just a headwind for OpenAI in general, and anything proxy OpenAI, it's getting hit. So that could be part of the reason right here. Why is Intel down? I think the lack of contracts with Apple. I think they're still going to have a big contract with Apple, but the lack of clarity around it, given Broadcom got one of the bigger contracts with Apple last week, is part of the reason why it's down. And the number two is, like, Intel still trades at 95 times forward earnings. Like, it's, I mean, when Intel was 140 pushing 900 billion in market cap, it just got more expensive. It's still expensive at 104, right? So I think we're seeing some level of reduction in that multiple. SoFi losing everything it got today, 1853 from 1930. Now, again, if I gave you the reason that, oh, Intel's down because their multiple is expensive for the past 5 months, like, that reason would be valid for like an hour, and then the next day or the next hour, the stock would just go up. So that you know, even me saying that reason, I don't know if that's the actual reason, but this is the first time for about a week the semis have gone down, and you could maybe say, hey, the multiple's getting re-rated to something more appropriate. And if the dip is not bought, then yeah, that will probably play a role in being the reason for why Intel is down from 140. But if it goes back to 120 tomorrow, then no, people don't care about the multiple. And so far, people have not cared about the multiple all year. Intel is still up 165% year to date. And over the past year, it's up almost 4x. So once again, I think we're trying to squeeze the last bit of juice we can out of some of these names. And there just might not be that much juice to potentially squeeze at this stage of the cycle, given it's July and July sucks for momentum. I do not think that the entire year is just going to be the semis going straight down. I mean, if that does happen, like, there would have to be a real reason for why the market has switched their tune, especially because remember the hyperscalers loaded up on debt last week. Again, the reason for that is to spend on the semis. And so that level of debt that they've continued to fuel up on, it doesn't seem like it's slowing down anytime soon. And if it's not slowing down anytime soon, then the semi companies will have plenty of earnings growth to continue to get. By the way, the head of AI at Tesla said, big shoes to fill, but I'm confident Optimus will not disappoint. So this is Tesla's factory getting rid of the Model S and Model X that they announced last year to get ready for Optimus production, which once again, Elon said 1 million robots by 2027. I don't know if that's going to happen, but I also think the humanoid hype and people betting on these humanoid SPACs, if Elon is barely going to be able to produce 100,000, if we're lucky next year, of robots, then these smaller companies are probably not going to be producing any meaningful amount either. So once again, like, the humanoid stuff is real, but I think it will take a little bit more time for it to fully come to fruition. Apple right there, 322, as that continues to get a bid and go up 2%. Software names are now turning red, folks. They're not really holding on, or at least they're losing a lot of their juice today. ServiceNow 110 back to 108. Where is Palantir? Yeah, Palantir officially turning red. Okay, so now it's kind of everything more than just the semis. SpaceX, wow, 80 cents, and we head to the 130s. And if we do, it is just $5 away from that IPO price. And again, I'm not happy. I'm not shorting SpaceX. I'm not happy that it's going down to IPO price if it does get there. But this was also kind of obvious, right? This was one of those things where it's like, Elon did not have to make the valuation of this company $2 trillion. He didn't have to do it. He chose to do it to make sure that early investors got a massive return. Now, those early investors would have still got a massive return if the valuation was like 1.3 trillion, which would be a lot more reasonable for the revenue and earnings potential of the business. But the insiders got greedy and probably pressured the company to raise at a crazy valuation so that they could raise a ton of money and not dilute themselves that much. Someone had to hold the bag for that to happen. Someone had to hold the bag. For every buyer, there is a seller. And for the people that jumped in on this thing, unfortunately, they are now holding the bag, which is not fun to see. But it's also one of those things that I think a lot of retail was actually smart about. Like, I think a lot of us predicted this shit would happen. And guess what? With only 4% of the float diluted, I mean, we still have a lot more shares that have to go get unlocked to make this float fully 100% diluted. It just looks like there's a broader headwind, unless there's some massive, contract that SpaceX gets or something that changes sentiment. But right now, sentiment is horrible, and the valuation is not supportive of sentiment at all. Robinhood right there, down about 2%. HIMS down 1% as well. I sold off my SpaceX. I put all the money into Broadcom. I feel like this time is different, sarcastically. Yeah, I mean, look, SpaceX was a good trade for like a day, literally a day. And, I don't want Elon's companies to fail or anything like that. It's just the valuation. It did not make sense. Like, in no world did it make sense. And you're seeing the market do what the market has to do, which is make valuations somewhat come to a reasonable level. A valuation can be crazy if a company's growing like crazy, but SpaceX is not even growing like crazy. So, it's hard for it to stay at that level. Having said that, I wonder psychologically if the market makers actually let it get to 135, because Cerebras lost their IPO price, then they rebounded pretty quickly. So even if it does touch 135, I think, you have plenty of buy orders waiting to support it at that price. Broadcom right there, 387, as that's down 3%. Someone check on the Olin crew. Well, that's the other part that annoyed me about SpaceX. All of Elon's buddies, that if they were actually managing professional capital, they would never touch SpaceX, because they know that, like, we can't actually manage other people's money and buy something that's worth this much that does not have the earnings power to even kind of justify it. But because they all got in at like sub 200 billion, they don't care about pumping it because, they know their bags are going to be heavily rewarded. And that's fine, but, none of them ever said maybe the valuation's kind of crazy. None of them. It was all about imagining the future. It's like, that's fine. You're allowed to, pump your bags, but you have to at least have some level of, hey, if you're thinking of buying this and you haven't bought it like I did 15 years ago, maybe look at the multiple on the stock. Nebius right there, really losing it as well. Down 7%. Down 7%. VG hitting 13. AppLovin got upgraded today. This one also down 6%, which is weird. AppLovin's been stuck all year around this range. I mean, it did get below 400, so it is nicely up since then. But man, these software names are showing amazing growth, but they're just not. We haven't had the full breakout of semis going down 20%, software going up 20%. We just haven't seen it yet. And I hope at least the software names can get a rotation, even if the semis don't have to go lower. But we've definitely seen software go down more than 20%, and semis go up a lot more than that. Part of the reason for this is because we've got a record amount of cash now in U.S. households. So take a look at this. U.S. households are sitting on a massive cash pile despite record equity exposure. Equity holdings in the U.S. are up to $72 trillion. This is $18 trillion above its long-term trend from 2009 to 2019. Household stock ownership has more than doubled since 2020. Meanwhile, cash and cash equivalents holdings are up to $20 trillion, an all-time high, which is up from $5 trillion. And this is consistent with the money market fund data we got last week, where money market funds were up by another $45 billion over the past 2 weeks. So you're seeing equities that still take up a large portion of household net worth in the United States, but you're seeing cash get up there, aka people are sitting on cash, and maybe they're waiting for a much more significant dip in order to be able to actually buy. Where is fear and greed? We are at neutral, folks. We are not at fear yet, but we are at neutral. Again, Trump already talked this morning about taking over the Strait of Hormuz. So you have those comments that are an overhang on the broader market. Where is oil? AppLovin 470. Oil is at 74. Oil's not really breaking out either, which is why it's just a weird market environment. Like, if oil was actually breaking out, you would really start to believe some of these dips are serious dips. Until it does, I mean, I wonder how aggressive these stocks have to go before they just get bought up, which in all likelihood, they're probably going to get bought up. I don't think we're taking Micron back down to 700. I think it'll bottom out in 890s, 870s like it did last week. But if oil got up to 85, yeah, Micron's going to 700. So we really need that type of a catalyst. Sentiment catalysts are fleeting because sentiment can change so quickly. Actual hard catalysts like oil prices can be much more demanding on equity prices, because also it forces the 10-year in the credit markets the question, how much of a equity risk premium do they want to put on stocks? And no matter what Trump or Iran have been doing, you haven't seen oil really get that crazy breakout. Marvell 220, as that's down 6% on the day. Meta, UBS cut their target from 865 to 765. And they cut Alphabet from 410 to 400. So you got UBS going a bit more cautious on the large caps today, as Google and Meta price targets have come down. Seeing some green candles come in, very typical 30 minutes into the day. So we had a little bit of a flush out. This would be the exact time for us to get a little bit of a move back to hopefully where we were trading at the beginning of the day. And then begs the question of, can we actually go higher from those levels? Robinhood 108.92 to 110. That's green. Uber 74.79. That's green. Micron could go to 780 in a week if the market pukes. That is fair. 780 is how far from here? We're at 920. So that would be a 15% dip. Yeah, to be honest, Micron's down 7% today, right? So doubling that would not be that excessive. SpaceX 140.3 touched 140.12. As you're seeing this one continue to go down. S-Max, thank you for the super chat. Hi, mate. I love your streams. They've been a huge help as I'm new to investing. If you were starting today, what would be your ideal market news stack, free or premium? It's interesting you asked that question. I would subscribe to cactusjack.com, which is a terminal that myself and a friend of the channel, Cactus Jack, have created. It is free. You can pay $5 a month if you want to support. If not, it's totally free to join. It connects to WhatsApp. There's the website right there. Yeah, I think this is the best news stack to get all your information from. It's not AI. It is a human curating all that news. So there's plenty of Twitter accounts to follow, but I think Cactus does a really good job of like curating all the news in one spot: macro, geopolitical, economic, etc. So cactusjack.com would be my pick. But Twitter's also really good. I'll pin this, by the way. Twitter is really good at getting a lot of news. And that's why I think everyone has to be on X. I mean, if they're really into finance, X is just, it's a real-time breaking news to get the information. Robinhood right there, 110.50, SoFi 18.50, Adobe at 227. What do we think about Netflix this week, folks? Do we think Netflix pumps? Do we think Netflix gets a big move or no? The multiple on this thing, again, is the lowest since 2023. You haven't been able to buy Netflix this cheap in a long time. My gut tells me this thing goes higher. I just wonder how much the move is respected and what they're going to have to say to get the market to really see some of that love for this name. I think Netflix gets a pump. I think it pumps. I don't know. I do not know. I don't see it going below 70. I feel like that's like a little too much for Netflix. Like, I don't think the earnings are going to be disappointing enough, especially given how much it's sold off. So I think it's, I don't know. I think it'll be okay. Microsoft 387. As that continues to go down. AXTI. This was a photonics name, right? Oh my goodness. Dude, wasn't this at like 150 at some point? 143 down to 50. Holy. This was a heavy retail photonics name, if I'm not wrong. AXTI. This was similar to AAOI, which has done better. Well, 233 to 110. Dude, photonics. Goodness gracious. Now, the thing about this is all of these are still up like crazy. So AXTI year to date is still up 200%. AAOI is still up 179%. Even AEHR, which has taken a really ugly hit, it's down another 5% today. Over the past month, it's down 40%. Air Test Systems, year to date, it's up 211%. So you look at some of the moves on these photonics names. Same thing with Lumentum. Lumentum fell from 1,000 to 765. Jensen invested $2 billion into this. Past month, it's down 20%. Year to date, it's still up 98%. So it's hard to complain that the photonics names were in a bubble when, they're still up 2 to 3x year to date. Now, obviously, they topped out pretty aggressively. But are these names going to zero? Because, maybe that would kind of confirm there was never anything there. Or the premium that they are still holding on to, is that enough to at least form a consolidated base here? Time will tell. SpaceX, she loses 140. She loses 140. Market cap is still 1.8 trillion on Mr. SpaceX. That is ugly. Ugly. I wonder if 135 is that psychological support that has some of the candle I'm looking at on SpaceX. There's a big volume profile. It feels like there is either an institution or a really big retail whale that's what caused, that candle right there, that middle candle right there. That's what caused that downside move. Maybe that was Jake Paul with his 70,000 shares that he got at 135. Maybe he was like, you know what? I'm up $3. I should keep the 200. Oh, Matt has to be printing on his short in the stock draft. Oh my goodness. Yeah, Matt is up 24% on that short. Hell of a call. It was a hell of a call. 138.32. As SpaceX is down 3%. Photonics has real revenue that explode later this year and next. That is fair, and the revenue of these photonics names is not. I mean, the fact that the S&P allowed Lumentum and Coherent to get into the index within a year, I thought was very interesting. So, I think they saw the Jensen investment and realized that these companies are super important when it comes to the overall AI build-out stack. It's just a question of the premium you put on them, right? It's not like the revenue and earnings aren't real. Like Poet doesn't actually have any real numbers that I know of in terms of serious revenue or EPS, but Lumentum does, AAOI does. It's just, again, they were up 5x, now they're only up 2x. So I think, once again, that's taking to be their app down 9% here. Ugly. Down 7.6 or 8.08. The only thing with a short is no telling where it'll be in a year. Yeah, that's fair. I think, that's why this year we'll be able to get rid of picks every quarter. And so I think Matt will probably close this into Q1 of our draft. So, I mean, it's a good move, man, but it takes some guts to do it because it's Elon at the end of the day, right? Like, he can make an announcement, anything could just flip this up. Because he shorted at 185, his margin of safety is just very, very high at this point. By the way, speaking of shorting, I explained shorting to my dad over the weekend because, like, he was seeing all these videos of people saying the word short, and he was like, what does it mean? And so I explained it to him, and he didn't really get it. So then we watched the Netflix documentary on GameStop, and we watched it together, and like he couldn't believe that like hedge funds can like bet on a company's downfall and profit off of it. And then he also couldn't believe that retail squeezed the crap out of the hedge funds. Like, watching that documentary again was just like, man, like that was just a moment in time where billions of dollars were lost from the suits, and retail was right, and they squeezed the crap out of them. But yeah, shorting is just one of those things where you pick on these companies that are dead. Now, SpaceX is not dead. It's just the other reason to short it is valuation is, unsustainable. Davis says, should have told your dad to look at you, then he'd know what short means. You know what? This is why I don't talk to Davis anymore. This is why he's not even my friend anymore. Meta 664, Netflix 75.12. Your dad's about to short SMCI. Oh my gosh, where is SMCI? This thing was at 37 2 weeks ago, bro. So many of these names fully re-rated. His son is 5 feet, but he doesn't know what short is. Guys, I'm 5'7". I'm not 5 feet. There's a freaking difference between 5'7" and 5 feet. It matters. It matters. Well, if you went short this morning, you've made some money. I mean, you're getting some of rebounds right here. I wonder if SpaceX even now is still a short at 138. It was at 145 early in the morning. So obviously since then, it's done very well. Micron started to recover, 930 right here. It's getting a little bit more of a rebound. Grab is indeed 4. That's correct. I'm coming up with my grab post this week. I was working on it over the weekend. It's just, I have a lot of stuff. I'm kind of thinking, should I just make it an article? But I'd rather make it an X post. But it includes a new valuation model. It includes a lot of reflections from my trip in Southeast Asia, just a bunch of different stuff I want to put in there. So either today or tomorrow, that post will be out. People can read up some of those initial thoughts. Intel 104.95. That continues to be down 4. All right, let's see if we have any macro news. We have anything else. Markets are starting to kind of flatline right here. The Dubai news we talked about with a new port. Oil still at 74. Red Cat's down 4% as well. So you're seeing Red Cat get hit. Lindsey Graham died over the weekend based on a cardiac and aortic dissection. So his heart stopped, essentially. Trump did comment on it over the weekend and said that, Lindsey was a good friend. He also did say that it was a big blow to the SAVE Act because now they've lost a vote. So that was kind of surprising because Lindsey Graham has been pretty vocal about this Iran war. And so for that to flip essentially in a day coming back from a trip was pretty crazy. But I wonder, the implications of what that's going to mean, obviously, for the future of the midterms. And, Trump was talking about how that affects their policies going forward as well as giving him his flowers. AAOI 112 right there, as that's down 6.3%. Cerebras, or Cerebras, as I should say, given the pronunciation of last week, is down 4.8. Where is SK Hynix? 7%. Evercore upgraded SanDisk to 3,100. 3,100. Their bull case is 4,000. They said investors are underappreciating the durability of their EPS and free cash flow, materially improved earnings visibility from new business model agreements, $11 billion of financial guarantees and prepayments provide better visibility, and they're modeling EPS of $212, which is ahead of $203 from the street for fiscal year 2027. And that's how they're getting to a $3,000 target. SanDisk is down 9% right here. I feel like these upgrades, once again, they're not doing much for these stocks. I feel like a lot of people are just like, okay, the analysts are upgrading it, but, where were these upgrades when these stocks were significantly lower than they are from here? And even with AMD, right? The upgrades are not. AMD got 4 upgrades last week. It didn't do much to the stock. Another upgrade today, not helping it either. Having said that, the EPS estimates are, intact. I don't think you could deny the analysis that Evercore is saying right here. It's just, A, do people believe those estimates? B, do you want to put a multiple on those estimates? That's a multiple that is, given to a company with sustained earnings growth, or is it a cyclical multiple where, it continues to be below 10 times? That is the broader question, I think, on SanDisk. Where is the US dollar? Dixie has been trending up. Yeah, wow, we're back at 101. So we were at 93 earlier in the year. I think it was like 95. Yeah, around 95. Now we're at 101. So the dollar continuing to gain strength, the 10-year continuing to go up, which I think is a sign of inflation obviously going higher. And I guess that's the broader concern right here for the equity markets. Did I say erotic? No, I meant to say I don't think his heart stopped due to something erotic. I meant to say aortic dissection. That's what I meant to say. That's what I was reading, is that, well, if I said erotic, that theoretically could have. I think I've read some stories about that leading to death at an older age, But yeah, I meant to say aortic dissection. Talk about a way to go, though. If it was erotic, that would definitely be a way to go, All right. What else do we have right here? Speaking of Lindsey Graham, let's actually get a little bit of coverage on that right here.
While being mindful of the fact that a senator has just died and, without any notice, there is going to be a rush to try and fill Senator Graham's seat, right? There's a lot to be done. The Save America Act, transportation, farm programs, all sorts of defense spending, and so on. What happens next?
You're right. There is so much to watch here, Vonnie, with the passing of Senator Lindsey Graham. When it comes to the domestic agenda, Republicans now have a 52-47 majority, and it's made even slimmer by the fact that Senator Mitch McConnell isn't right now voting due to his own health concerns. There's so much on the agenda at the moment. Keep in mind that Senator Graham is the head of the Budget Committee, and he really helped to shepherd through the legislative priorities that we actually saw get through this Congress, perhaps most notably the One Big Beautiful Bill. There have been questions here about whether or not Republicans will pursue a third reconciliation package, though that, of course, faces an uphill battle. But that seems to be something that was put on the table in order to get provisions of President Trump's Save America Act, that voter ID law that he's essentially hinging all other priorities on.
You know, the reason this matters for the broader stock market is because if Trump can't get the voter ID law passed, a lot of his economic agenda, or the broader Republican Party economic agenda, which obviously affects the stock market, is going to come into question because they don't have the votes from the Republicans. The Democrats are definitely not voting for it. If they lose a majority in the Senate and the House, it's not being passed. If they gain a majority, it's got to be a 2/3 majority to get passed. So you've got a lot of these conflicting narratives around if they're going to be able to get his next landmark piece of legislation passed. And if it doesn't, you know, what does that mean for economic legislation? Because again, Trump could have signed the Housing Act on Friday, which would have been really good for Lennar and Zillow and, you know, broader American home affordability. And he didn't. And he's using a argument around voter ID as the basis for why the American people should be accepting of not having any other legislation go through until that gets passed. I mean, it's literally called the Save America Act, right? So now that they lost the vote, obviously in a more tragic way, you've got the economic implications of that into question. Wow, Oracle just getting destroyed. 135.88. SPY, did we get a red candle? We did right there. 753 to 751. Let's see if that loses 750. Trump just tweeted, okay, the Hormuz Strait is open and remain open with or without Iran. We are reinstating the Iranian blockade. Oh boy. So named because it is the only thing stopping Iran ships or customers from entering or leaving. All other countries will have fair and open use of the strait. The USA will be, from this point forward, known as the guardian of the Hormuz Strait. But as such, and as a matter of fairness, will be reimbursed at the rate of 20% on all cargo shipped for any and all costs necessary to do the job of providing safety and security to this volatile section of the world. The process and formation will begin immediately. Thank you for your attention to this matter. What does that mean? The U.S. will now get a reimbursement at the rate of 20% on all cargo shipped for any and all costs necessary to do the job of providing safety and security to this very volatile section of the world. What is it? Who the hell is going to pay 20% on? What company or country is going to pay 20% on all? Did he just put a tariff on cargo in the Strait of Hormuz that they don't even control? What is happening? I don't know if the market's even going to go down on this, because I think the market might just be like, this makes so little sense that it doesn't make sense to go red. I legit think the market might not even go that far down here. You're seeing some green candles already, because they might just be thinking that this makes no sense. Like, Trump is just tweeting shit to tweet shit at this point. Yeah, look at Robinhood. It's actually going up right now. Your high beta name should be going down. Rocket Lab's going up. The USA will, from this point forward, be known as the guardian of the Hormuz Strait, and as a matter of fairness, will be reimbursed at the rate of 20% on all cargo shipped. Yeah, he's putting a Trump toll. Am I crazy, or can someone explain to who's going to pay that 20%? Like, I'm trying to logically think. Like, does Saudi Arabia, that has to get a bunch of ships passed through something that the U.S. doesn't even control, through this now Iranian blockade, they're going to pay 20%? Can they even afford 20%? I mean, no one's going to pay this. No one has the ability to. And also, why would they pay it to the U.S.? What is the U.S. doing? Guarding the Hormuz Strait? What does that even mean? And also, what? Is he going to force the Iranians to pay? The Iranians, I mean, they're not even willing to negotiate. How are they going to pay you 20% of every toll they get? This is weird. This one is a bit weird. But I also wonder if the market's going to even care about this. It's insurance for safe passage. Okay. I wonder whether it's the Europeans, the Saudis. I wonder if any of them, the Middle East. I mean, like, for them to agree to pay 20% on commodities that barely have a margin of 10% is very confusing. Meta right there, down about 2%. Is that's getting? What happens if they don't pay? That's a good question. I don't think anyone has the answer to that. I don't even know if Trump has the answer to that, but that is the latest tweet. You would think the markets would get hit even worse right here. They're not really. We had that candle from 753 to 751, and now we're almost at 752. I think the market's just ignoring it and saying this does not make sense, and so we're moving on. I think. All right, Trump tolls. That is what is looking like what we've got right here. Let's get some coverage on this and see if we have some more explanation of what this is going to play out to become.
Could now add a variable, a layer, right, to the bullish higher oil price story.
I think it's jumping a little bit even further now, up more than 5% on this news that Trump is reinstating the blockade.
So, okay, this happening real time. So you're sort of getting Ross Sullivan here. The blockade is going to be 70-ish U.S. naval ships that are escorting ships in and out. A lot of people point out, what does that have to do with a drone? If you're going to fire a drone from Iran, well, the U.S. ships have the ability to shoot down drones, but we're back, I assume, and again, the headline's crossing right now, to military-style escorts, where you're doing this to protect the insurance markets.
That's what we were doing in May, though, right? Isn't basically
same thing?
Yeah,
same thing, right? It's you want to take a ship through the Strait of Hormuz. Mostly, they need ships to go in, David. Plenty of ships are going out. The numbers that you hear, 2/3 of those are exits, because ships don't want to go back in. I spoke with both the shipping CEO and a marine insurance source yesterday. And you can get insurance. Ships are still moving. But as one shipping source told me, CEO of a major shipping company, CFO of a major shipping company, there's a lot more ships that are willing to come out. There's not as many ships that are willing to go in to the Arabian Gulf because there's a fear they're going to get trapped like they did for months at the beginning. So breaking news there on the Trump.
Yeah. Let's get to Megan Casella, who can flesh out what the president just wrote on Truth Social. Hey, Megan.
That's right, absolutely. You guys got the first headline there, which is that the president says he's reinstating the blockade in the Strait of Hormuz. But there's a second piece of this where he also says the U.S. will be reimbursed for all cargo being shipped. So let me read you the full post here from Truth Social. The president says the Hormuz Strait is open and will remain open with or without Iran. We are reinstating the Iranian blockade, so named because it is only stopping Iran ships or customers from entering or leaving. All other countries, he says, will have fair and open use of the strait. The USA will be, from this point forward, known as the guardian of the Hormuz Strait, but as such and as a matter of fairness, will be reimbursed at the rate of 20% on all cargo shipped for any and all costs necessary to do the job of providing safety and security to this very volatile section of the world. And he closes by saying the process and formation will begin immediately. So guys, a few questions on this here, and I will have to go into the building after this to see what more I can learn. But one, of course, the blockade going back in place, a major shift in the U.S.'s stance after that was one of the biggest pieces of the memorandum of understanding that the blockade would be lifted. It was also one of the only remaining pieces of the MOU that was still in place after the ceasefire he declared was over and the sanctions were put back on Iran. Now the blockade also going back into place. But the 20% fee it appears the U.S. will be charging here is also a major shift and not something that we've heard the White House talking about all that much as of recently. The president had been saying he wanted to see the strait free and open to all. Who will have to be charging this fee? Will it be paid by the ships going through there? Now, is it down to either paying a fee to the Iranians or to the Americans? Is that where we are now? Clearly a major development here and something that shows just how much further away we are from getting the deal that the White House had said they wanted. Guys.
Yeah, I'm looking at the headlines, and Megan, do we know, to your point, says the True Social post was maybe not as clear as it could have been. Is Trump saying that the U.S. is going to reimburse shippers, which I can't imagine that would be the case, or the shippers for the protection are going to have to pay back the United States so we can fund? It costs a lot to do this. The U.S. will get paid effectively for the protection of ships.
That is what it appears to be, is the latter there, Brian. Is he's saying that the shippers, from what I understand from reading this, will be paying the U.S. It seems most clear that the U.S. is the one getting reimbursed here. Let me look back at the text. It says, as a matter of fairness, the USA from this point forward will be reimbursed at the rate of 20% on all cargo ships. And he goes on to say that that fee is for any and all costs necessary to do the job of providing safety and security. So he's saying the U.S. will continue, as they have been, to be trying to guide ships through the strait, is my understanding, but that now there's going to be a fee for that because, as you say, it does cost a lot. We've also heard that Hill Republicans, among others, are talking about the U.S.'s war money is dwindling here. They've been asking Congress for more money. So while that debate is ongoing, now he's saying they're asking for fees to be paid.
Yeah, he had indicated similar thoughts, I think, earlier on Fox, actually, that we shared as well, Megan, in terms of potentially the U.S. being reimbursed. Megan, thank you. Megan Casella in D.C.
It's not clear, Brian. So who controls the strait? Because Iran says that they control the strait.
Well,
so now do we control the strait?
The Strait of Hormuz, which I've been in, literally floated in it, is 21 miles wide. Okay, there's 3 miles that are Omani territory, 3 miles that are Iranian territory, and the middle 16 miles is open international waters. Right. So nobody controls it. Iran's trying to control it with,
but isn't the problem that they have these
speedboats, with bombs, mines, drones, as I've reported, trash bags, doubling as mines. They're trying to trick out. It's cheaper. You can float things that look like mines, but they're actually trash bags. So I'm just doing the math here. 20% fee. All right, so a super tanker, VLCC, carries 2 million barrels of crude. It's called $74 Carl a barrel. Might help with calculator because I'm not that good here. $148 million worth of cargo times 20% is $29.5 million. Iran's toll is $2 million on the safety route. I don't know if they're talking about the total insured value of the cargo, but if so, I don't 20% is
literally no one knows what the hell is happening. Absolutely no one understands. And that's why I think the market honestly isn't going down, because like this is so out of left field that the market doesn't know how to interpret this as like objectively being bad, because the market might not believe this is even a real thing at this point.
An onerous number that might seem to be a little high
for shippers.
You'd rather take the Iranian, pay the Iranians.
That's way more than their profit margin.
No,
so you're going to lose the money to get the
but
ship
Trump
out
said
safely.
earlier on that interview, they're on our side. They're going to pay us. The wealthy nations that are sending ships through.
I see. They're on
the
our
wealthy
side.
nations are Qatar,
That's good to hear.
Kuwait, Bahrain, and Saudi
The
Arabia.
ones that are getting attacked from Iran.
Yeah, because Iran is trying to force those countries sort of into choose a side, if you will. The ships that are paying the toll, the Iran toll, are the ships that are chartered with oil for sale elsewhere. They're the mostly Greek-owned, Cypriot-owned ships. Ships that are owned by Kuwait, Bahrain, ships that are owned by sovereign nations, they are not paying a toll. They will never pay the toll. I've spoken with the leaders of these nations directly, and I can tell you right now, they will not ever pay a toll, because to your earlier point, David, Strait of Hormuz is an open international waterway. It's been used by them for 75 years.
Right. Brian, before I let you go, just to come to China, because 4 million fewer barrels being imported by China, is that going to continue? And how are they doing that?
That's what I don't like about you, Faber. You're too smart.
Oh, yeah, right.
All right, we'll go back to that. But yeah, everyone's confused. Trump just tweeted again in honor of Senator Lindsey Graham, a big supporter. The U.S. Senate should pass the Clarity Act. China and many other countries would like to take complete and total control of this major financial happening, as well as AI, where we are now leading, but where they are fighting hard. Don't let China win on either subject. So Trump is saying because of Lindsey Graham's passing, he would not like China to win when it comes to crypto. And that is why the Clarity Act should be passed. By the way, markets, once again, the lack of clarity around this post by Trump around 20% fees, I think is actually bullish, because it's so like like the tariffs in April of 2025, it was obvious what would happen if Trump were to impose these like massive tariffs. And so the market could react. They could say, okay, we're going to go down because this is going to be bad for earnings. This thing feels so like unbelievable and that it doesn't really make much sense that I think the market's like, this is just Trump messing around and he's going to eventually have to, go back on what he's saying right here. SpaceX getting a bid almost back up to 140. Nebius, look at that. 206 to 217. Getting some love as well. Micron back up to freaking 940. It was at almost 915. So I think you're in a weird way having the market ignore what theoretically would be really bad for stocks if every shipper or country had to pay 20% on cargo, because that cost would, guess what, go to the consumer, right? Which would be inflationary, which would mean rate hikes. Like you could just put the logic together and easily get to the conclusion that it wouldn't be good. And the market is ignoring that. Tomorrow is Tuesday, so maybe the market's also pricing in a taco that could be coming sooner than later. It's not enforceable. Yeah, I think that's the other reason the market's like, how would you enforce it? I mean, you heard him just say some countries and some ships might rather pay the Iran toll over the U.S. toll if it's cheaper than having to pay 20% on all cargo that ship. Rocket Lab right there down 3%. Zeta 2238. All right, so some of your software names getting back to some love. Let's finish up what they were saying on China.
I don't know. Nobody knows. So the question is the Chinese demand destruction, the push to more EVs, more train travel, less air jet travel, is that a permanent shift because China's sort of pushing its population to do one thing? Because China imports almost all of its oil. They're incredibly oil reliant. Or is it temporary because they've got 1.2 billion in storage? They can draw down their own storage pretty easily. And they were the primary buyers of what were relatively inexpensive Iranian barrels that were being sold under sanction at a discount. The big variable here, of course, is what, if anything, does the U.S. do about Karg Island, the U.S. Iranian port? I could tell you this much, and I think it's been reported. If not, I'm Faber Report. I'm reporting news, which is pretty much every amphibious assault vehicle we can spare, and a lot of military members, a lot of airplanes, they're all in the Gulf right now. A lot of refueling, KC-135 refueling tankers. Got a lot of friends in Norfolk, Virginia. Shout out to the Navy. A lot of them shipped off. So we'll see what happens. Yeah. But there's the headline.
And the funding for future operations is very much in question as the House is trying to get some work done before the August recess.
Well,
what if this is just the typical back and forth that we had to deal with back in May? And none of these sides are actually serious. The Iranians aren't serious. The U.S. isn't serious. It's just all, as AMD tries to get back, it's all words being thrown out back and forth that don't have any real relevancy. I mean, I don't think we can discount that possibility of being how this plays out. Palantir flipping green. Intel still red. VG still up 5. SK Hynix is back up to 160. From the 150s. So again, it looks like that Trump tweet ended up pumping the market more than dumping it after the initial candle on the SPY. That's Cope. That's probably Cope. But it does feel like a lot of the typical back and forth. I don't know, guys. The fact that we signed a negotiation framework in late June with a 60-day ceasefire, I mean, that's officially over. CCXI, Agility Robotics SPAC, that's down 2.4%. I mean, being short for the majority of the opening hour made sense. Now, I don't know if you can easily short today or easily get bearish in general. NVIDIA's flat, not doing anything, but that's red. Unless we're just waiting for a breakdown. I mean, even Nebius, right? If you got super bearish at 210, you're almost at 220 right here. Because that's holding on. They've got a debit card reader on the blockade. Dude, the blockade was actually kind of effective 2 months ago because like it forced the Iranians to realize that like if a ship goes through, it's going to get stuck for the U.S. So like they get to monitor the Strait of Hormuz, but the U.S. gets to monitor what happens after you pass the Strait of Hormuz, and which means the ships are kind of stuck in purgatory. And it wasn't really helping the Iranians. I think that that blockade was actually one of the better strategies the U.S. had to get the Iranians to finally sit down and negotiate. But once you got those negotiations done, you know, they weren't able to actually hold up, which was the deeper issue. Where's Duolingo at? That is a good question. Duolingo 126. This one's actually done well from those 105 lows. Maybe a stock that, again, sentiment sucked on it, but just got too cheap. BTC, what's Bitcoin doing? Bitcoin's been dead as well. Bitcoin's tried to come back. There's a lot of on-chain activity happening. Robinhood's crypto event. You've got meme coins coming back to life. I mean, there was a meme coin that on the new Robinhood chain, it's called Cash Cat, went from like a 10th or 100th of a penny to like 18 cents. It like, I mean, there's people that made millions and millions of dollars off of it. So you're starting to get some more of that activity come back, but you know, the underlying assets that kind of are in charge of the broader crypto TAM, like Bitcoin, ETH, those haven't moved too much. Robinhood is burning a ton of ETH on their layer 2 on the Robinhood chain, which is good for ETH, but not really seeing a massive move here. Why is app down 9%? I honestly don't know. That's weird. That's very. They got a few upgrades today, so I am not sure. Nokia, this one's been stuck as well. Again, the sort of, there's three fundamental problems with Nokia right now. Number one, it's already up 100% this year, which is why, again, you have to be careful getting into the names that are super, super heavy, and they've got to be relatively small parts of the portfolio if you're buying them after that crazy run up, just because, you know, you're asking the market for a lot more of a move. Number two, they fall with the semiconductors in general. So semi sentiment is bad. So Nokia is, you know, not going to be one of those names that takes off to the moon when that's happening. And then number three, their AI RAN solutions are super bullish, but that part of the business is not the core part of the business yet. That is part of that long-term thesis on Nokia, or at least 6 to 12 month thesis that is going to end up flipping out. The most bullish part about Nokia, even without those three headwinds, is that insiders are buying like crazy. And I think that's kind of the bull case on this one right here. But again, a Nokia, a BlackBerry, these names have just run so much that, you know, buying them or buying the dip, like they need to actually dip. And for Nokia, again, my dip has been 11 and below. I don't think we've actually, did we hit 11 and below yet? Yeah, the lowest we got to was like 11.20. I'm looking for a real, you know, because it was stuck between 8 and 10 for a long time before it finally broke out to 12 to 14. Yeah, 11.47 is the lowest we got. Below 11, I think we get a real opportunity. And there's nothing to say that, you know, if Micron tanks 10, 15% from here, it's not going to take down Nokia, BlackBerry, all these names with it. Yeah, BlackBerry's been stuck with Nokia in the same rate. Even though BlackBerry's done great. Their QNX platform getting a lot more coverage. Obviously, they're becoming seen as one of the more the bigger players in robotics. Their NVDA partnership is very strong. But I just don't think you could have the most high beta semi names like Marvell fall off a cliff and then Nokia and BlackBerry go to the moon. Having said that, now that Marvell's back to where it was a month ago, Nokia's back to where it was a few months ago. Maybe this is the dip. I just also think if you want to get a little greedy, you know, the dip could get a lot worse, and that would be the actual moment where you buy. But, you know, obviously long-term DCAing, this creates a bunch of opportunities. Netflix right there, $74.94. What do you think about Oracle? I think Oracle's cheap right here. I bought at 135 in April. It's at 136. So, I mean, let's see if we go below 130s. I kind of don't want to buy at my cost basis. I would like it to get below there at this point and once again present an opportunity. But I think for someone who's not in Oracle, you didn't have to buy it at 250. You're getting it significantly cheaper from those levels. Google right there, 354. Reddit is doing good today. I like Reddit doing good. 202, at least above 200, which is nice. People saying I got into T1 today. You know, the thing about solar, which is really interesting, there was a video over the weekend by Dylan Patel making a broader argument for why solar matters. And this is probably why Leopold is heavily in this. But it also depends on, the administration's policies when it comes to solar as well.
And some of the subsidies too. That it's going to get cheaper at some point to do solar plus battery. And then you've got space data centers, right, where you don't even need a battery. You just stick it in space, and you've got a solar panel, and that's it, right? And so you've got this whole continuum of ways to generate power. Whether it be all the way, taking diesel engines and making them gas engines, or, using dual combined cycle engines, all the way downstream to, let's just ship the chips into space instead, right? So there's the whole continuum. And there's a lot of money to be made there. There's a lot of interesting dynamic things to do there. That's why, actually the largest data set and research vertical for semi-analysis, which you'd think is semiconductors, is actually data centers and energy. It's data centers, industrials, and energy. We call it the DEI team, the data center, energy, industrial. It's a pun internally. The tag is at DEI team. So Jeremy, he leads that team. He came up with the name. But anyway, so data centers, energy, and industrials. That's actually our biggest research vertical, because we're tracking every data center and every power plant. And so the market, when we identify like a delay, or this is happening, or there's going to be this build, or this company's going to have this many data centers go online in this quarter, it's something that no one else in the industry can do. And that's sort of like why it's one of our biggest verticals. And everyone's interested in that, right? Google's.
So same argument right here, as energy and industrials continue to have more of a constraint on the ability for AI to come online, which obviously requires the components of a data center. Solar becomes a very interesting opportunity. The problem is the administration has not been friendly to solar because Trump wants to drill, baby, drill. So Enphase has had a rebound, but it's not had the massive catalyst that you would expect. Same thing with First Solar, T1, et cetera. But I think that's part of the reason why situational awareness is in T1. They see the need for energy, and that energy has to come from a lot of different spaces, and T1 is one of the spaces to get it at, down about 4%. Also, this is a small company, right? 1.8 billion, 238 million shares. I could see this easily doubling just based off a ton of hype around any headline that solar becomes more valuable. So I think that's why people are taking a shot on this one. Intel 105. We're starting to see some more red candles come in. Hoodie 110 tried to make a rebound to 112, got rejected. Adobe not really holding on to a lot of its momentum. SoFi 1845 as that one continues to get hit. And then Amazon and Apple losing a lot of its strength as well, but still up 1% on the day. Yeah, GEV, that should be another large catalyst as well, 1060. All right, so I think for the next few days, the market's going to be trying to figure out what this 20% reimbursement actually means on the Strait of Hormuz, and how serious Trump is about enforcing this. I think Besant's going to have to probably give some comments soon, given he's in charge of the Treasury. CoreWeave right there, 87.29, up from 84. Gold is down 2%. 20% reimbursement. Yeah, again, this new talking point about, the United States has been guarding the Strait of Hormuz for the past 50 years and we haven't been paid for it. I feel like this is a new thing the administration came up with today. What do you think S&P will be by the end of summer? Let's do that question. All right, what do you guys think? S&P 500, end of summer. So let's just do end of August. I know technically it's September 21st, but end of summer. We'll do a poll on this. It's a good question. I actually haven't thought about it because it depends on how ugly a July correction has to be for it to get bad. But then again, we've had a July correction, just not in the indices. It's been in the semi names. So we're at 7,500 right now. Okay, so 7,500, 7,200, 7,800, or let's do 7,000 and below. Let's see what people think. RBC did raise their price target to 81.50, and this was their logic for why 81.50 today.
Communication services to market. Did that work out? That move being market weight tech and overweight communication services?
Well, look, I think this is one of the things we've struggled with a little bit, right? Is that we've had some concerns about the semis, and what I found in my recent marketing is that the valuations have come down. I don't think that problem has been fully resolved. A lot of the hedge funds, it's come down enough for them, and so they want to move into the space. I think that if you kind of look at the different areas of opportunity in the market right now, comm services just doesn't feel like it's lining up to be the preferred growth area. For a long time, we had attractive valuations there, which we didn't have in the tech sector itself. We had strong earnings revision trends. We had pretty good flows. What we're finding now is that the tech sector actually has very strong flows. Now, there have been a week or two here of outflows, but they've bounced back pretty quickly. And on the valuation model, our technology sector broadly has kind of moved down. It's not quite at neutral, but it's really, really close. It's very, very slightly elevated. And that's come from dramatic improvement on the software side. And then we've also seen, kind of semis retreat a bit. I wish they'd retreated more, but it's been enough to get the model back to close to neutral.
Do any of these switches have to do with the earnings we'll see in the forecast in the next couple of?
I think that's the other thing we're thinking a lot about is just the earnings trajectory, right? And the 8150 target, doesn't seem that heroic, but you'd be amazed on the amount of pushback that we get.
What do you mean from who?
I would say not so much the bottom-up equity crowd because they understand the power of sort of the AI earnings story, but when we talk to more macro folks, we find we really have to walk them through what the bottom-up consensus numbers are looking at, how strong that AI story is compared to the rest of the market, and frankly, just how much of the weighting is in that AI story.
20 times 400 on the S&P earnings is 8,000, so it doesn't seem like it's that hard to sell.
So, it's funny. We have a trailing model that we look at. We set it right now for 1Q27. We'll switch that over to 2Q7 after this reporting season. But when we walk through the numbers, we actually come up with a trailing PE of about 24.25, and we have macro inputs that go into that. So it's about 3% inflation we're baking in, one Fed hike, and then also looking at 10-year yields around 4.5%. And when I walk the macro crowd through that and say, we're getting some compression on that particular metric by baking in some very conservative, we think, macro inputs, they calm down a little bit.
Hey, Lori, just the idea that you were looking.
Basically, she's saying, look, the earnings estimates are below 400. If we get above 400 and put a 20x multiple on that, we're definitely getting above 8,000. The question is, how much could the multiple expand to get us above 8,000? And that's why they have 8150. Now, above 8,000 is about 12% year to date. So it's not like the massive moves that we've seen that we've seen over the past 3 years, right? Or 4 years. We did 23%, 25%, and then 20%. So I mean, for us to get that type of a move again, you would need around 8,300, 8,250 to get there. It doesn't seem that crazy, but the semis got to participate there. I don't think industrials, I don't think energy, I don't think consumer cyclicals. I don't think Home Depot and Walmart are going to get us there. It's got to be tech that's going to expand that multiple. And right now tech is up a lot this year, and that's the underlying question. How much more juice does tech have left, particularly the semis, to keep that multiple afloat? ASTS right there back above 70, as that's down 4%. What did you guys say on the poll? 37% say 7,800. 30% say 75. So, all right, so 30% saying flat, 16%, a bit more bearish. If we fell below 7,000, it would be very similar to every other midterm year. October would be a buy the dip as going into the midterms, and the summer would be the high beta weakness caused by midterms in general. I mean, like, that wouldn't be crazy to imagine. Given the level of leverage in the system, how much liquidation would have to happen for it to be ugly? Because if we do fall below 7,000, SK Hynix, you could kiss that goodbye, along with the Kospi. Like, the memory stocks are not going to be able to hold up if we fall below 7,000. And then, if the Koreans get liquidated, how much of the Korean leverage is already in the U.S. markets? Not to mention, do we actually get a rate hike or not if this Trump-Iran 20% toll thing ends up leading to higher prices? Like, there's just a lot of ways to paint a bearish picture for the summer, but in the midterm year, there's always a lot of ways to paint a bearish picture, and it doesn't seem like it's as different. Tom Lee said we dump sometime in the second half of the year and then we pump into year end. Yeah, so that Tom Lee thesis, I think, has been has been well articulated. Now, again, his thesis on the dump is that it's going to feel like a bear market, which would necessitate, a 20% drawdown or something, or at least 15%. So, well below 7,000. But his argument is that will be the best opportunity to buy, which I don't think that's too controversial to say. It is controversial to say we're going to be touching the March lows. Like, could you imagine us touching the March lows? By the way, Evan, thank you for the 5 gifted memberships. Appreciate you being here. Thank you for the gifted memberships. The March lows would be crazy, bro. That's 630 on SPY. Where was Kospi on March 30th? Kospi, which is the Korean index, March 30th was at 5,000. It got all the way up to 9,000, so almost doubled, and it's now at 6,800. Yeah, Kospi goes to 5,000. Things gonna be bad. I don't know. I don't see that happening, dude. I just don't see it being that bad. I really don't. I think that's a little bit too aggressive. I think there's too much cash, too many optimistic things around what's going on with compute. You would need like an AI narrative shift heavily. Or you need a credit event, which I don't know. I mean, do we really have something that's that ugly in the credit markets that could, create that big of a drawdown? Rocket Lab right there continues to be stuck below 78, 77, 73. Feeling like the bear market doesn't have to fall 20 or 15%. Feeling like a bear market just means that we have this extreme fear like we did start if they run. Yeah, but extreme fear, which we were in 3 weeks ago, I don't know. That was S&P 720. Did that feel like a bear market to people? Nebius, by the way, at that time, I remember this. Nebius was at 210 that day. It got to the lows of 204. I specifically remember that day. That was the day that I got sick and I had COVID. And so when we hit 720 that day, and Nebius was basically around this range, I don't know, it didn't feel like a bear market. This was 3 days after the hot labor market report caused the Friday sell-off that we saw because there were too many jobs. That's when we went to extreme fear. I don't think Tom Lee's talking about that type of, I think he's talking about like a legit drawdown. Like some, oh shit, like we're really feeling the type of pain. I mean, that's what a bear market implies, right? So I wonder if it's that or if it's just another extreme fear. Oracle down today is most of a lot of high beta. Makes no sense. Unbelievable how disgusting the Oracle dump has been. Yeah, the Oracle dump also feels a little bit more calculated. It feels like some institutions are getting out of this thing because 250 to 135 is not retail. I know all the neoclouds have corrected, but this feels like a bunch of toots that just don't like the leverage on Oracle's balance sheet. Or quite frankly, I mean, simply put, it might be, these institutions talk to each other. There might be an institution that's heavily levered up into OpenAI and they're feeling afraid of their position. And they might be telling their buddies, hey, short the stocks that are heavily proxied to OpenAI. Oracle, outside of Microsoft, is the most heavily proxied stock in the market to OpenAI. Microsoft at least has an underlying business that doesn't rely on OpenAI. Oracle, without OpenAI, Oracle's done. Like their entire growth trajectory is destroyed. Now, I think it's a relatively decent buy right here, down from 250. Like you're getting, I mean, even if it goes to 120, it's like, okay, you buy the dip there. Like you get, if starting a position here doesn't seem crazy, because I don't think they're taking it down that much lower. But if there's an OpenAI headwind, I think that's when Oracle's RPO gets re-rated. And if that gets re-rated, then the stock really gets hit. But if that's not changing, then it's just sentiment. And, that sentiment potentially is creating an opportunity. Sam rug pulled Larry. Well, it didn't help that Larry Ellison got levered up on all this Paramount stock. Like you talk about leverage. I mean, he's tied Oracle to Paramount's success as well now. And Warner Brothers, there's just so much that's on the balance sheet of Oracle that has implications for, where the market's going to interpret this going into the next couple of years. Here's what the Delta CEO said today after their earnings on Friday around oil prices.
Consumer. Well, first of all, thank you for coming down. There's not just one consumer. in our marketplace. But broadly speaking, I think the consumer's doing well. Certainly the higher end consumer is doing very, very well. That's our consumer base. When you look at what's happening in the market, when you see what's happening in real estate, opportunities for that consumer to invest in themselves, invest in the experience economy. They may not be buying things as much, but they're investing in things they care about for themselves, their families, their friends in the future. And that's travel.
You also talk about the difficulty, and we have seen oil prices inflect a bit higher. How much room do you have to maneuver if this is the new normal, or potentially $80 on Brent crude is the new normal, which we're just up against?
I think we'll do just fine. We look at our business model. Our business model is geared towards a higher end consumer. So our consumer has the ability to sustain this level. In fact, we saw it in the quarter. We made at 9% operating margin with fuel prices much higher than where they are in the existing, the existing landscape. So I think oil is going to stay sticky for longer. I'm not sure it's going to be in crude though. I think the refined costs, the cracked spreads are where you're going to find it's going to take a lot longer for that to come down. All that's going to mean is those brands that bring value to consumers in terms of experience, bring opportunity for people to go and explore and give them adventure as their means for enjoying life and getting away. And our international travel season is looking very, very healthy. Businesses, international, as I just said, American Express, our loyalty programs, our cargo business, we have so many different lines of business, including here in the U.S., our domestic travel. It's all doing very, very well, and I don't see fuel prices deterring that.
You talk about how this has been a sea change in terms of the ability for airlines to catch up with the pace of inflation. Not completely, but enough. You saw a big jump up in airline prices over the quarter. How much further does it have to go to catch up and potentially offset stickier oil prices?
If you look at post-COVID, airfares are about 10 to 15% below where inflation has been. So I think there's still significant room.
So if oil prices go further, you think that airfare prices could go higher without causing just demand destruction?
I think so. We just saw it in the quarter.
Is it going to come across the board, or more particularly with the premium cabin?
It's going to be in the premium cabins. When we look at the lower end of the market, the low fare carriers, they're still losing a lot of money. And so while Delta, which is at the top of the food chain, did very well, we represented 60% of the overall profits for the industry, our estimate in the quarter, despite only having 20% share. It means the other 80% still has a lot of work to do to get caught up. And it's going to happen by being more disciplined in terms of the strategies they deploy, making certain that they can only put out capacity that is profitable, that will return a margin to them.
And I'm here with Ed Bastian, the chief executive.
That's incredible, dude. Delta is 80% of the profits, despite only having, of the whole industry, despite only having 20% of market share. I mean, I did not know Delta was that good at monetizing. Obviously, they have their own refinery, so they weren't hit as badly as the other airlines with the oil crisis. But notice he mentioned that, the upper end part of their tickets, aka first class, is what's subsidizing the money-losing parts of economy that, they don't have full market share in, but given the first class seats are doing so well, they are continuing to produce profits. So, the real takeaway from that? The real takeaway from that, by the way, put in the chat if you are heavy on Delta. United has been what I've used for like 10 years, but put in the chat if you're more of a Delta person. The takeaway from that is this K-shaped economy is so real. And if we were to get a stock market crash, the upper part of that K is not going to be buying first class tickets. And the wealth effect will absolutely become much more real. People see their portfolios drop significantly. And they're probably, not going to spend as much as they've been spending on discretionary items like first class tickets. So that K-shape is really what's holding up the U.S. economy right now. Netflix 75.36 as that continues to try to break out and go up. Elizabeth said, I just paid $7,000 to go business on Delta to France. Wow. A lot of you guys saying Delta is the one that you like. I think I've done one Delta flight. I did United to Singapore. It's one of those things, like once you're with an airline, you're kind of, it's hard to leave them. Kind of just trust that airline. Which is also why their margins suck, because airlines are actually one of the first businesses Peter Thiel talks about in 0 to 1 is companies that don't really have a moat, and why competition is for losers, right? Because you're competing with so many other companies that you can't have a form of monopolistic pricing power. and therefore it's a race to the bottom when it comes to margins. Hollis says, I'll still buy first class because I'll make a lot on the crash. Okay, Mr. Burry. Mr. Burry. By the way, Burry went long on DraftKings and Flutter. So he's longing gambling. Long gambling. Admit, do you have Netflix? I do not have Netflix. I do think it's probably close to the bottom, but I do not own the name. Long gambling is interesting. His thesis is the prediction markets are going to get screwed when you have a new administration in power, which I don't think is a crazy thesis, but to bet on a company that made $35 million off $6.8 billion in revenue that has been decimated by not being able to innovate in the prediction market space, to bet that they're going to be the winners if the Democrats win, like that's the entire thesis. It's just so weird. Like he has this very complex short thesis about how everything's going to collapse. And he's like, in the meantime, I'm going to go long gambling. So maybe that plays out. How does that make sense to bet against the market and for gambling? I don't think it does, because if the market collapses, people are not going to be gambling as easily as they are. You know, I also just think DraftKings missed the big opportunity with prediction markets. I mean, the call sheet volume has been unbelievable, dude. This World Cup. Oh, by the way, those games over the weekend were crazy. I actually watched both of them. I watched because they were back to back, right? I really wanted Norway to win because I like that Holland guy, but unfortunately, Norway was not able to get it done. So England, congrats. And then Argentina, I thought they were going to win. So, but the amount of volume on the World Cup quarterfinals, Robinhood, Kalshi, I mean, these guys are just cleaning house with the amount of volume that these contracts are generating. Like, it's pretty incredible. Thoughts on Figma? You know, I'm happy you brought this up. I am starting to do some serious due diligence on Figma. Of course, it's up 7% today. Look, when you look at their enterprise value versus their growth, the only bear case is two things on Figma. Number one is stock-based comp, and number two is Claude, destroying their intermediation as a design company because Claude ends up creating their own design. I think the Claude design, Claude killing software thing, it's very pertinent for Figma because one could say it's so easy for them to do it, but the numbers are not showing in Figma's latest quarter that Claude is anywhere near to disrupting Figma. So then two, you go down to the financials, and the financials aren't that ugly. The stock-based comp is a little not pretty, but they trade at 10 times sales, 11 billion enterprise value, growing 41% year over year. Now, I don't know if they're going to be able to grow 41% next year. This is the first year they've been public, so obviously they have really good growth numbers. But I don't know if Figma should be stuck in the low 20s. It's just, is it the sexy name that people want to buy in a world of AI right now? Especially with the overhang of Claude, disrupting their business. But I don't think Figma is dirt cheap. Let me say that. At 16, you can make that case, and it was at 16 a few months ago, but at 22, I don't think it's like overtly expensive or anything like that. Oh, the Conor McGregor thing was crazy. I don't even watch UFC, but obviously the clips went viral. I mean, I could not believe that the guy lost in less than 10 seconds. Like, that was crazy, dude. I felt bad for it. This was his first fight since 2021, right? This has been his first fight in a long time. I know everyone was super hyped up for it. Yeah, that was he still got paid though, right? So a lot of people, I mean, the conspiracy was that he knew his leg was hurt, but obviously he wants to get paid and hype it up. And then now he came out and said, no, I didn't know my leg would give out within 5 seconds, but it did. So that was kind of crazy. He was injured before the fight, but too much money on the line to cancel. Iran, are we up right here? Iran goes red. So when's the next World Cup game? It's going to be tomorrow. No, Wednesday. England and Argentina. Okay, it's going to be exciting. This is going to be exciting. Someone said FIFA stands for Fix It for Argentina. I did not know there was this much hate around Argentina, dude. But there is. People freaking hate Argentina. Oh, tomorrow's the other one, right? Wednesday is Argentina and England. Apple just acquired a company, SigLens. Apple acquired SigLens, gaining software for monitoring and debugging interrelated apps and processes. The EU says Apple acquired certain assets and can hire certain employees. SigLens was an application monitor for tracking logs and activity across many apps or routines. Okay, not a massive acquisition, but still an acquisition. Someone bought $4 million into TSM calls, 435. Strike is July 31st. TSM, along with Broadcom and NVIDIA, large cap semis down on the day. Yeah, France and Spain is tomorrow. It's not hate, it's facts. Look, I have no dog in the race of Argentina or how people think about them. I was just surprised that, it's like in the NBA, people hate OKC and they think the refs cheat for OKC every game. So I feel like that's the same mentality towards Argentina. NVIDIA still flat right here, 207.30. What stocks are up today? Reddit's up a little bit. Grab trying to hold on to 4. That's up 1.6. Lumentum, that's flat. Netflix up 2%. Palantir's up 1.5. Hims is not really up. Adobe, I think, is actually one of the better software names. Adobe and ServiceNow, they're going up. Zeta's up. Apple is up. Amazon finally trying to make a move to 250. Let's actually look at Amazon's chart. Amazon actually looks good right here. It's above VWAP. It's above both bands underneath its moving averages. The volume is not really good on Amazon. It's only 10 million shares. It's about 0.53 on a volume scale, but at least it's breaking above 249. Fastly, are we getting the CDNs that are up? Whoa, wow, Fastly back above 20, which is nice. This thing was stuck at 18 for the past month. Akamai, Fastly, all those guys got some love after DigitalOcean's earnings. Roblox, is that green? Roblox is green. So the stocks that are green today have nothing to do with the semis. Visa, MasterCard, Zeta, kind of your traditional names. UNH. Unity, again, Unity, Gavin Baker is long Unity on the idea of video game costs going down. I've done zero analysis on Unity, but it is, with the idea of Grand Theft Auto coming out soon and people caring more about video games, it is potentially a thesis to look into here.
Look, in the short term, AI is going to be amazing for the video game platforms. So I think AI's impact on video games has been very misunderstood. AI world models are going to lower the cost of developing a game by 90%. If it used to cost $300 million to make a AAA title like Call of Duty, or $200 million or $100 million or whatever the number is, it goes down 90%. And so this might end up being really bad for companies that make video games, because you're going to have a lot more competition. But if you were a video game platform, and we all know what those platforms are, this is going to be really good for you, because there's going to be an explosion of content. But the idea that we are going to use AI to render a video game on the phone instead of the GPU that is on every phone, every iPad, every PC in the next 5 to 7 years is ridiculous.
So the broader argument kind of being made by Gavin Baker that you are going to see the cost to produce this stuff go down. Unity right there basically flat on the day, but it is up from last week. Are you still on Zeta? Yes. I think this earnings could be the earnings that really gets the breakout into that 27, 28 range. But, I don't want to speak too soon because every earnings they've delivered, but the stock is just not cooperated yet. SK Hynix, that's down 6. CoreWeave still down 2. GE Vernova, that is down 2. Is Salesforce up? Salesforce is up. Look at that, 170. finally getting a break on Salesforce. So Salesforce, ServiceNow, Adobe are really your big winners today, as they're getting a lot more love. When is Zeta earnings? I have no idea. It's probably in like 3 weeks. Microsoft, do we have people buying Microsoft? Is it going to pull a Meta? I mean, this thing breaks above 400. Maybe sentiment really changes on it. And, you know, we saw Meta sentiment change quickly. You can imagine that happening for Mr. Nadella. The good thing is going into earnings this time, these stocks are all so low that, like, outside of Google, you would expect them to, you know, any good news to be rewarded. I wonder if the earnings are strong enough here. I also wonder if CapEx is going to be rewarded. Like if Microsoft comes out and says we're increasing our CapEx by 20% for next year, because I think Microsoft has to give next year guidance as well. I wonder if the street's going to be mad, or they're going to be like, okay, good, like the story's intact. Or if they're like, cool, you could spend that CapEx, but we're going to go buy Micron and we're going to sell you off again, because there's no need for us to buy you guys if you're spending so much. Now, for the semis, it's the opposite, right? The semis are up so much that, like, an AMD has to produce really, really, really good news for the market to, I guess, think of them as a name that should continue to go higher. Daniel says, recently long Microsoft with 100 shares. I didn't hate Bill Gates. Dude, did you guys see the controversy around Bill Gates' daughter? That she, like, faked her sales for her new fashion app? I haven't really gone that deep into it, so I haven't fully looked at it, but apparently they, like, misreported revenue to be able to get more funding on a fashion app. And, you know, obviously people are questioning why the daughter of one of the richest guys in the world has to do this stuff. But that's been definitely making people wonder what's going on there. DraftKings 27, that's still up 2%. ASML is going to be a big one this week. ASML has had a massive run. I mean, it was pushing 1900 a while ago. It has had a good run from the lows of March. Year to date, it's up 50%. In March, it was at 1320. So I don't expect ASML to deliver a result. Like, here's the thing. ASML and TSM this week are going to be super important, because it's going to be like, okay, we all know they're going to crush earnings. TSM will pull up their numbers from this morning. They had some of the monthly sales out. But in the midst of them crushing earnings, what if their stocks don't go up? Like, what if their stocks legitimately just, you know, the market's just like, cool, good earnings, but we're not paying more for these names. Is that an indicator for the other semiconductor stocks going into next quarter? So TSM reported June sales of $13.8 billion, up basically 70% year over year. And they brought in a total of $39.68 billion in revenue in Q2, which is up 36% year over year. So we already know kind of their numbers when it comes to revenue. And now it's a question of, you know, how much more the market's willing to pay for it. As long as it doesn't drag all semis down. Well, that's the fear, right? Like, they could easily drag a lot of the semis down if this, doesn't fully come to fruition. Which is also why I think the market's kind of stuck right here. By the way, that housing law on affordability, even without Trump's signature, that has officially become law. Here's an update on that right here.
Goldman Sachs. Stephen, welcome back. It's good to have you.
Thank you. Good to be back.
So you were the first person I wanted to talk to, because we were talking as this bill was going through its various iterations, and you were concerned because of limitations that would be put on huge institutional investors like you on buying housing. What's the upshot?
Well, the upshot is that the president and lawmakers have spoken, and they want to set certain parameters around which capital can be deployed in housing, an issue very important to the American people. And so from our vantage point, this is a bit about the maturity of this industry, a recognition of the place of private capital in housing, and a set of parameters and directions by which, subject to the limitations the president and lawmakers have put in place, capital can come in and take up its position in leading to increased housing stock, better housing stock, more opportunity for people to become homeowners, all of which is critically important to the direction of housing in the country.
But can you and Blackstone and Invitation Homes, can you guys still buy up housing?
Sure. I think the thing to understand about this bill is two things as it relates to housing stock. Number one, everything we all own as an industry, 6 months from the date this became law, is grandfathered under this bill. And importantly, on the forward, we are clear to deploy capital in housing so long as we do it within the parameters that Washington has set, namely that we can buy build to rent, which is a predominant component of new housing. We can buy under various other exceptions, including rent to renovate, where we improve the housing stock, or we buy under a home ownership boost, where we give people an opportunity to sort of transition where they want from renters to owners. And so within that broad construct of exceptions to the limitations, I think we will all run our businesses consistent now
We're
with
just going to be regulated more.
I think we'll be regulated. The reality is, I think this bill over the last 6 months, and we spoke, the three of us, when the president first put up on Truth Social what he wanted to do.
He was saying he wanted you guys out of the housing business.
He did. But I think over time, and this is an important point to make, there is broad recognition now, both by the White House and lawmakers in an overwhelming majority, that private capital has a very big role to play for a component of the American population that rents a home, and that we can contribute to growing good quality housing stock for average and ordinary Americans. And I think the recognition of the role of private capital here in the context of the 6 months it took to get to where we are is an important thing to recognize. And to some extent, like other regulated industries, banks, airlines, and the like, we take up an important position in the American economy in an issue that's important to the American people. And so we now understand the parameters within which we operate.
You came on, as you said, when this was still in the sausage machine, and you were very vocal about how you were a supply provider.
Correct.
Why you're a lot less fired up now? Is it because it was watered down, or is
Trump says he's recommending Lindsey Graham's sister to fill the South Carolina senator seat on an interim basis? So he's recommended Lindsey Graham's sister to fill the late South Carolina senator seat on an interim basis, as they figure out what they're going to do with that Senate seat.
Just it is what it is?
No, I'm probably less fired up now because I think we collectively, us and Washington, achieved what is good for the American people, namely that capital, private capital, can still play a very significant role in housing around this country. Bear in mind that as an industry, we rent to average Americans, and about a third of American households rent, either by choice or by necessity. And what was important that we got through in the 6 months that this began when we last spoke is that there's a recognition in Congress and in the White House that private capital has an important role to play. It is what got us fired up at the start of this. And I think we have wound up in a very constructive place, both in the context of where private capital can move now with certainty and rules are on the table. And I think as a regulated industry, we're very clear as to what the White House and lawmakers want in terms of where capital can play a role.
On the bill overall, I mean, look, housing affordability is a big problem in this country. Home prices are at record highs. Mortgage rates are still, what, around 30-year mortgage, around 6.5%. Does the bill do anything to alleviate that?
It's an excellent question. It's important to understand, in as much as we're talking about a portion of the bill that governs single-family rentals, this is an enormous piece of legislation that covers a lot about housing. It, for example, deals with regulation and red tape and tries to smooth out the ability of home builders
to get more supply?
To get more supply and put supply to work. Mind you, away from us putting equity to work in single-family rentals, we at Pretium are lending money. In fact, we've lent about $3 billion to small and mid-sized home builders. Their ability now, under this bill, to find an opportunity to build more quickly with less red tape, less hold up, is an important thing to have happen. And I think there are other aspects of this bill away from just regulation that are positive for housing broadly. But as it relates to us, it just puts us in a better place. And I think it sets up the market to come back with capital because, as we all know, where there's certainty, there's confidence. And I think we're back now 6 months into this with a confident market ready to come back in. And I think you'll start to see it in the housing numbers, which began to suffer because private capital had been sidelined and new housing starts had been slowed.
But the other reason housing has suffered more than private equity getting into it, which is, you know, a big part of the reason, it is rates, right? Rates going up just makes it really, really hard for the flow of supply, A, to come online, but B, for, you know, people to want to sell their house because they have to take up a pretty aggressive mortgage to buy the next one. So I think it still comes back down to oil prices more than anything to actually get the incentives aligned for people to buy houses. And you know, that's kind of why I think Trump's been screaming about getting rates down. It's just if we have 20% tolls on cargo going through the straits, not really helping, you know, oil meaningfully come down. Axios, the U.S. hasn't discussed the issue of possible tolls for securing the Strait of Hormuz with any allies in the region. This is also why I think the market is ignoring the Strait news that Trump tweeted about, because he probably just tweeted it. He didn't actually inform the Qataris or anyone else that it's that serious. But it is indeed something that he said here today. Is the 20% even legal? Can you pay the U.S. to provide security? Yeah, I don't think anyone knows. It's Monday morning. Trump has to do something to get the week started. And 20% cargo taxes is, I guess, how we're starting it off. Palantir, any boost right here? Palantir 129.46. We're at 138 last week, so getting above 130 I don't think is too crazy. We got to see if we can. Iran still down 1, TSM down 0.5. Some of these names coming back. I'm not seeing all the semis completely get destroyed. They're still down a lot, but they're not down as much as they were at the opening bell. SK Hynix gets rejected at 160, down to 156. Micron up a lot from the lows. It was at 902. It's at 940. So pretty meaningful reversal from those levels as well. Yeah, Intel announced they're investing in Ireland this morning. I believe it's 5.7 billion. The investment will upgrade its existing fabs. Intel says the project supports AI and high-performance computing demand. It's going to be expanding its manufacturing at its Lexilip campus in Ireland. 4,900 people. They've invested 30 billion pounds there. 30 billion euros there since 1989. So again, more investments from the semiconductor names, but their stock's not really benefiting. Oscar, that is up 4%. That's been an amazing name in the age of this AI healthcare tailwind. Tempus, UNH, all of those getting a bigger bid right there. SoFi goes red as rate hike probabilities potentially go up with oil prices going up. What do you think about BM&R right here? So again, the Robinhood chain stuff has been super bullish for ETH, which is good. The Clarity Act getting passed again, I think, is bullish for all crypto. I don't know if it's like a, 10% day for the crypto stocks, because I still think you need the macro to come around for the MicroStrategies and BM&Rs to really get some love. But it's bullish. I mean, if we get the crypto thing, the Clarity Act passed completely, I can't see how that's bad for the crypto ecosystem and digital assets in general. I just wonder, is the market, going to take Bitcoin to 70 and ETH to 2,000 a day? That actually happens as SpaceX continues to struggle below 140, down to 138. AMD 550. That's back up. Why has Google been sleeping for the past month? They did drop 85 billion of equity on the market. I think that's been the primary reason. Still above the 350 price that Berkshire got in at. So they haven't lost that yet. But Google also, Google's done so well last year. Like, we can complain about Meta for the past 2 years. We can't complain about Google because it's some, stock was at 150. So 92% over the past year. Year to date, still up 12%. Still one of the better Mag 7s. Granted, it did hit 408 a month ago. So it did have the room to get above 400. It's just that equity announcement, I think, really took her down. And it is now part of the Dow Jones. Where is the Dow? Are we still above 53? We are 52.5. Down a little today. 52.5. Okay, I think that's pretty much it here for today. Do we have anything else? Talked about oil, software rotation happening a little bit today. Gold's down 2%. Got this new Trump 20% thing. SpaceX obviously taking a beating today. It is what it is. Maybe we get to buy this thing below 135. Amazon being one of the better ones today. Let's see if 250 is on deck. It touched it for a second. Does feel like she wants to get at least back over 249. Then Apple has been a winner today as well. Do you like Zscaler? Zscaler in particular, I don't love because their gross margins, they guided down by about 4% going into the end of this year, which is why the stock fell from 180 down to 120. But cybersecurity in general, yes, I think is going to be really important in the age of AI. The problem is CrowdStrike's up 50% this year. Palo Alto's almost doubled this year. So these are Palo Alto's up 82%. These are the part of the software stack that have actually done the best out of all SaaS. And now they're expensive, in my opinion. I mean, their growth is not even that impressive, to be honest. I mean, Palo Alto just acquired a bunch of companies. CrowdStrike just below 30%. But the market recognizes that cybersecurity is going to be a massive deal when it comes to AI, and so they are rightly getting a premium. I just don't think at these exact prices they're, the most attractive right here. All right, folks, that is what we got for today. Palantir right here did touch 130. Let's see if we can stay above it. Overall, not a horrible day for a lot of the other parts of the economy outside of semis. Semis taking a bit of a beating. It would not surprise me if they end up getting somewhat of a recovery, just like Nebius, 208 to 216, still down on the day, but not down as much. S&P 500 really untouched, even with the Trump 20% announcement. 752.13. We'll see by the end of the day if that gets worse. I don't think we have any earnings today. We do not. So tomorrow, I'll be back for the market close today. But tomorrow we have JP Morgan, Goldman Sachs, Bank of America, Citi, Wells Fargo in the morning. And that will kick off bank earnings for Q2. And then we will get into tech as ServiceNow, Salesforce, and Adobe really having the majority of some really strong software momentum today. So I guess a little bit of rotation, but towards the end of the day, we'll see how much the market actually cares about this oil news. All right, word of the day. What do we got? Oh, I think I know this word. This should not be too bad. Kairos, the opportune or decisive moment to act, the perfect timing for a particular action. The company had spent years preparing, but its success ultimately depended on recognizing the Kairos to launch. Unlike Chronos, which is clock time, Kairos is about the right time when circumstances align and acting matters more than waiting. Every week we get a one-day rotation. Yeah, that's true. Every week we do. Okay, there you go, folks. That is what we got. Wait, I think, did I say this one wrong? I think I might have said this wrong. Hold on. How do you say it? No, I don't want to watch an ad just to announce the pronunciation. Is it Kairos? I'm thinking of Kairos from, isn't that a place in the world? That's what I'm thinking of it as. Is it actually Kairos? I think it might be. Hold on. Let's see. Let's see.
Kairos.
Kairos. Okay. I was thinking of Kairos. I was thinking of Egypt. Yeah. That's how you say it in Egypt, right? Kairos is a place in Egypt, right? Oh, that's CAI. Oh, whatever. I'm thinking of Cairo. This place looks great. I want to visit this one day. Look at that. That place looks crazy. All right. Well, we were kind of close. Kairos. That's what we got. All right. Maybe we'll make a good school teacher. I would be the best school teacher. I'll be back for the market close. Hopefully one day we'll visit Cairo instead of Kairos. I'll see you guys then. We'll have Technical Tuesday tomorrow, as always. Today we'll see how the headlines evolve going into the end of the day. Again, this oil thing with Trump, 20%. We really got to see how much the market cares about it. If not, then hopefully, we get to at least sustain some of this price action here today. All right. Thank you, everybody. Appreciate you all. I will see you guys on the market close. Bye, everybody. Have a good one.